All right, you guys. I'll go ahead and kick this off, and then I'm going to bring the Polish assassin up to after me, and then we're going to have 100. Pedro, go ahead and mute your mic, bud. Lower left. Thank you. Okay, so first off, I'll give a quick update on the SEC whistleblower report that I filed well over a year ago. Really, nothing new, but that's an open case, and so I'm able to add new information to it when I want to. So it's it's not the easiest process, but it's not impossible. So I'm able to add to that, and that's exactly what I'll do if I see some things that look really notable. Other than that, I think I've mentioned before, I don't know whether or not you all have seen it, but I did provide information to the DJT team. And the information I've been providing, which is sort of, what I would consider my wheelhouse, as opposed to some of the stuff that Pedro and 100 will talk about in a minute here, is really the, tracking, the recording of the real-time time and sales window. And then basically studying those recordings after hours in a number of tickers from AMC, GME, DJT, Mullen, to try to figure out, sort of the dance, the little ballet that goes on between shares that are driven into the dark pool as opposed to orders that are executed on the lit exchange, and sort of what that looks like. And I can 100% identify exactly what they're doing. And so that was part of some of the information I've been passing along. It doesn't matter which ticker I'm looking at. If there's going to be a ladder attack, you can see exactly how that sets up. It's, I think in one of the other calls, I talked about it in terms of a boxer with the left-right combo. So it's really obvious to watch the way they collapse volume, driving buying pressure into the dark pool, into a high, into a kind of a pressure point high, and then follow it up with the ladder attacks into the lit exchange and all of their ammunition. There's two things they do to strip away buying pressure, which basically creates a situation where you have no true price discovery. And that's number one, obviously driving shares into the dark pool. But more importantly, and something that I never knew about, and I was telling Pedro the other day, I bet that at the multi-billion-dollar fund I worked at, you would have zero people that understood what I came to learn here, which is just that odd lots do not print at all. I mean, it could be 99 shares, and it does not print at all to the data window, which feeds the tick, which then feeds every price bar above it, right? Every time frame. So if they can do what they did with one of my orders in real time, which I purposely was executing during the recording to try to take a look at how it would be handled, and I purposely routed it through a more obscure exchange so that I could see my order clearly come up, as opposed to just routing it, letting them route it, or having most of the order flow go through the NASDAQ. And so basically my 100 share, round lot limit order,
Bam, are you there? You cut off.
Payment for order flow, meaning, is the payment for order flow actually helping retail to save money? And so they can claim it when they do just a fractional, minute order improvement. So what they do basically is they take it and split it up in simple terms. The 100 share lot, the round lot that would have printed to the data window, to the tick, and to the upstream price bars, does not print when it's an 80 share order fill and a 20 share. You'd split it into two separate orders. And so that's a big part of what they're doing. And payment for order flow probably has a lot to do with that. So that's it. Let me go ahead and introduce the other speakers. And I'm really going to shut up for most of this call and let these guys riff, because these are the two guys I respect the most. that I've met during this whole, journey to try to educate everyone on this financial market corruption that we think we found. So our first speaker is going to be Pedro. He was the first person to convince me that these wash sales, or the handoffs, are aimed at disappearing the FTDs, which are the failure to delivers, from the public view by moving a portion of them overseas, or all in some cases. And so after he's done speaking, I'm going to bring up 100. He also opened my eyes to something that I couldn't really define that well, but I thought I was seeing. And so anyway, I'll let him talk about that. But really, I came to the conclusion that really the best way to describe what's happening is to compare it to a dirty business where they're running two separate sets of accounting books. And so he'll sort of talk about, FTDs and with relation to where they go, even if some of them are being disappeared into overseas accounts. So in other words, although they do, it is technically correct what I keep saying about disappearing, taking care of the FTD and disappearing that, taking the pressure off of the publicly posted information. It's not true that they disappear completely in the technical sense of the word, because regulators and people behind the scenes can still see that, which really, in my mind, makes things even worse, actually. So, Pedro, why don't you go ahead and light up your mic and take it from there? I want you to talk a little bit about these small cap tickers that you've been tracking and posting about on X, and sort of defining why you think it looks like a wash sale or a handoff, and go from there, and then we'll hand off to 100 and let you guys riff.
Okay. First, let's get a big shout out for my Philadelphia Eagles.
Polish,
Super
go
Bowl
ahead and
champ,
unmute your mic.
world champs. Can you hear me?
I know, BAM. Can you hear Polish?
Pedro, can you hear me?
Hello?
100, can you hear me?
Yeah, I can hear you, but I don't think you can hear Polish. You might have to drop and then come back in.
100, can you hear me?
How about now?
I'm going to drop you down Polish for a second, and then I'm going to bring you back in.
Thumbs up if anyone can hear me in the space. Any kind of reaction. Hey, can anyone hear me? Anybody thumbs up if you can hear me in the space?
I can hear you.
How about me?
I can
okay,
hear you,
I can hear you now. Did you guys hear that intro at all, or was I dead the whole time?
No, we can hear you.
Okay, I don't know what just happened. Anyway, things are glitching. But so go ahead, Pedro, and take it away, buddy.
Okay, well, first, let's get a big shout out for my Super Bowl champion, Philadelphia Eagles, world champ.
Fair enough.
Let's start with that. We can start with that.
I love you running back.
I hardly think I'm an expert. 100, it does that really peels back the onion and gets deep in the weeds in terms of the real technical stuff. I'm much more of a observational kind of guy, and I've just been around a long time. But it's absolutely obvious that there's something going on with these wash selling events. I mean, I've been highlighting every morning. They're obvious. I mean, they're so fucking obvious. We used to have 2 to 3 a month. Now we have 2 to 3 a day. 2 days ago, I think we had 7. And we're talking absurd situations like TRNR. Yesterday traded 158 million shares and has a 1.5 million share float. Maybe it's 2 million share float. Stuff that's mathematically impossible. 11 times the float trading in a 2.5 minute window. These are clearly wash selling events. Like, so the Sifu minions, and we all know who they are. They run around and they try to tell everybody that's just traders trading, and it's high frequency trading. Well, most of high frequency trading is reactionary, right? So they're not proactive. They don't go out and buy something directionally. They wait for retail orders to come in, and then they front run. And so, yeah, you can do it, but if you don't have retail trading and other institutions trading, high frequency goes to zero because they have nothing to do. They sit around. So, and just the volume events that happen in these stocks are 100% inexplainable and impossible, literally mathematically impossible for there to even be that much volume at that much time. Even if everybody woke up and decided they wanted to trade this tiny little microcap, you see situations where the stock trades literally 10 times its float from 7 a.m. to 7:02. And what they're doing here is they're moving counterfeit positions. They're moving counterfeit short positions. And I think I've tracked about 80 now since December 1st. And it's obvious they're going down a list, and they're moving these positions to, in my opinion, to stay ahead of FTDs, right? So imagine your left pocket's trading with your right pocket. So it's all internal. There's no material change of ownership. They're just moving the position from one prime to another because one prime saying you're running out of a borrow, you need to get shares in. And they're like, well, okay, well, we'll get you shares. And what they do is they literally buy from their right hand. The left hand buys from the right hand, and they move the position. They quote, deliver the shares one place, but then they have a new position from a different price. It's the shorts that are taking these stocks up. People think they're squeezes. They're not squeezes. The shorts are actually taking these up to move the position over at a price that they can then feel comfortable fighting from. And you'll see the pattern, the chart pattern is always the same. Like I posted a couple weeks ago, I posted like 30 names, and you can see that the pattern's the same. And what's interesting is even like the AMC and GME moves last May around Roaring Kitty, that was all bunk. That was just all one big moving of the position. I think it was moving of the position before we went to T+1 on May 29th. They just used Roaring Kitty as their air cover for a much bigger, well-known, like how could they ever justify trading this many shares, billions of shares in such a short period of time? But if you go back and look at the charts of GME and AMC, they look just like all these tiny little microcaps that they're washing. And lately I've been going, how is it possible that they're moving such large positions, right? So if you had like Turner, for example, TRNR, it's had two reverse splits, and one is like a one for 40, and then another one that's like a 1 for 100. If you were short 50 million shares before the first reverse split, 50 million, you'd be short, and your shares were reduced on every reverse split, right? So if you have, how a reverse split works, you have the reverse split divisor, right? So if you have 10,000 shares and it's a 1 for 10, you have 10,000 shares to owning 1,000 shares, and the price is adjusted. If you were short 50 million shares of TRNR before the first split, and you didn't do a thing, and your 50 million was reduced, divided by 40, and then that number was divided by 100, you'd be short 12,500 shares at this point. Nothing, de minimis. But why are they moving such large positions? And I started to speculate and started watching these things, and I've come to the conclusion that counterfeit shares that are sold into these stocks on an ex-clearing basis, so outside of the DTCC, it's broker to broker, and most likely just from the payment for order flow, when they internalize it, they're just selling, they're just a liquidity ferry, and they just sell you a digital entry into your account. That's not splitting. And so you can now imagine, well, if in the example of TRNR, the longs are getting reduced, the float is getting reduced, but what if those counterfeit shares are not being reduced? So now, instead of being short of the 50 million shares going from 50 million to 12,500, let's say half of those shares didn't get reduced. Now you have 25 million shares short of a 2 million share float. And then that's the only explanation I've been able to see for these volume events where, I mean, TRNR yesterday, 11 times its float traded in a 2-minute window. That's impossible unless it's a handoff, unless it's literally the right side, the right pocket buying from the left pocket, and they're literally moving the position internally, right? I could show you stuff where big firms that we know, big market making firms, have been busted all the time for wash selling. And it's not a lot of people get confused with the idea of a tax loss wash sale. It's not a tax loss wash sale. It's a no material change of ownership wash sale. It's a and they can't do it. They can't move the positions in a cross. They can't just put up a whatever, because when you do that, there's breadcrumbs that get left, and it's very easy for regulators to come in and say, okay, well, who crossed that? Who was the beneficial buyer? Who was the beneficial seller of this position? And that's too easy. So what they do is they literally will lay out in dark pools up the ladder, and then the buy side, they'll buy into their own arms. And that's who's ripping the stock up and moving the shares over. Every volume pattern is always the same. They've been doing more and more pre-market, moving it because there's less slippage. And when I say slippage, that's retail and traders getting in the way and actually selling into it. Because if the stock is one and they want to move this position at $3 so that the new position is working from a higher level, they have to buy everything that's out there from 1 to 3. And so if they do it fast before really people wake up and realize what the hell is going on, then once they get it, then you'll see the same pattern. Almost all of it goes on pre-market in the first 30 minutes. Once that first 30 minutes is done, then they can get their new Predator algo on the stock, and you'll always see the same reversal. If anybody has any questions, I can literally send you 100 charts that look identical. And if you wiped out what stock it was, you'd be like, that's the same stock. So anyway, this pattern is going on. And at first I thought it was because we were heading into the February 14th new transparency rules in terms of short reporting. Then they were able to get the 1-year extension on that. It slowed down for a little bit, but then it's just recently heated back up again. The other thing that we know is that when positions, and FINRA admitted this, is that when positions are moved offshore, so imagine if they're moving the position internally, but the new, where they're shorting in the new side is out of a overseas account, or Caymans or somewhere overseas. They literally can move the position out of the United States, and then the position is domiciled offshore. Once it's moved offshore, FINRA admitted they can no longer see it, and it comes out of the quote unquote reported number. So when the minions all say, well, look at the reported short, there's no reported short, it's all fucking bunk. It means nothing. It's meaningless. FINRA admitted that proprietary accounts, swaps, anything synthetic, and anything overseas is not in the reported number. So I've counted about 80 events at least since December 1st. It's a material change in the behavior. They're moving positions. I don't necessarily know where or exactly why, but the pattern is obvious. And it's not coincidental. Like 1 or 2 times, okay, but this is multiple every day, and I've been trying to highlight them. So you can imagine
Go ahead, Pete. Go ahead.
I was just saying, you can imagine the systemic risk when you think about, okay, if there's one position in one of these tiny ones where the counterfeit shares didn't reverse split, you're talking about being short 5x the float of a tiny little microcap. That one company can lose hundreds of millions of dollars just in that one. And this is across hundreds, if not thousands of companies. It's a business model, and we're seeing they're on the run. They know that whether either Doge was coming or whatever, but the frequency has accelerated so much. Literally went from 2 to 3 a month to 2 to 3 a day. So there's a reason behind it. I wish I knew exactly what it was. I like to think that it's because they're worried that the flashlight's coming, but that's been my most recent focus since last 2 or 3 months. So I'll shut up from there. If anybody has any questions or want to go from that.
Well, let's we're gonna flow through to 100 next, and then we're gonna open up the mics for questions. But so once Pedro pointed this out to me, and I started to do a little deeper dive into the daily volume bar, or even an hourly volume bar, or even a 5-minute or 1-minute volume bar, what I ended up finding was something that's basically impossible unless someone's running predatory algorithms and manipulating price. And then it makes the most sense if you talk about it in terms of this backdrop of what they're trying to accomplish through wash sales and handoffs. So basically, what I found was not in pre-market activity. Obviously, pre-market sort of high frequency trading is insane, and something that really didn't exist a long time ago. But what I ended up finding was not only tracking it down to just 1 minute of price activity, but it was the first 8 seconds of the 1 minute bar. They were running high frequency, and the range top to bottom was 10% plus. So just this violent, insane range with a huge volume spike. And it wasn't running the first 1 minute bar of a new hour, which would be more typical. It was running 1 minute into the new hour, and then just the first 8-second window of that. Well, then after Pedro handed off a few other tickers to me to go take a look at, I ended up finding another one that ran where they ran the exact same algorithm, exact same time, the first 8 seconds of the second minute into the hour, pre-market, crazy range, crazy volume, on a completely different name and a completely different ticker. So now I've found multiples of those so far. So obviously we're handing that information off, and it won't take much for them to track down who's running that. So we're making a lot of progress. As far as Pedro's last comment about not knowing who's doing it or where it's going as far as the offshore, that's a perfect segue to bring up 100. And
just if I could just finish, if I could just interject quickly one thing, if just anecdotally, just to give anybody who's traded institutionally will absolutely agree with this. And I traded a lot institutionally, buy side and the sell side. If you have a sell order or a buy order and you're trading for an institution and you have a lot of stock to buy or sell, and the stock makes a wild, abrupt move higher if you're selling or if you're buying, no matter what, the way to get yourself fired by an institution being a trader is to not tell your client and just keep selling when something abnormal is going on in the stock. Institutions, what they want you to do is cancel. That the immediate reaction of every institutional trader, if they see something in an order that's happening that they're involved in, that's like, whoa, the first thing you do is bail out, call your client and say, hey, this thing's just ripped whatever, 20%. I don't see any news. What do you want to do? Right? You don't just lay into it and sell millions of shares. If you have 2 million shares of stock for sale and something happens, you don't just go, yeah, because you don't know what the news is. So it's counter against what we see, these volume events in these small names. The idea or the mere concept or probability.
Can you guys hear Pedro?
That there's
100.
What's that?
I lost you completely. I don't know if you glitched out of the entire space or just my connection.
No, I can hear him. Can you hear
Can you
me?
hear me?
I can hear you now. 100. Did you hear the rest of his train of thought and his entire comment there, or did he glitch out?
Yes, I can hear. I think you're the one having.
100, you with us?
You get my point. Is that it's an absurd notion that in these tiny names that institutions are paired off and it's real, like it's not prearranged, and that's not how the world works in real life institutional trading, is my point. So it makes the whole thing that much more improbable, and confirmation that it's all prearranged, it's all wash selling, and it is they have to be moving positions that we have no idea how really big they are.
Exactly. And people like Shilly Sean, the Motley Fool writer that comes after me and you and everybody every day. This idea of him trying to claim that it's all high frequency trading of the same shares over legitimate shares over and over again is completely absurd. Number one, who's on the other side? What it really is, and what he knows it really is it's not only a wash, and it not only lands overseas, but it's landing into that second set of books that I talked about in my first analogy of, a crooked business running 2 separate sets of books. So that's where the failure to deliver is landing And so with that, let's bring 100 up, buddy. Thank you again for joining us. And why don't you just, add to anything that Pedro just talked about, but I'd especially like you to dive into the your research regarding QSIPs and the tracking of the FTDs and what we talked about earlier, bud. Thank you. Hey, so this space is super glitchy, you guys. This is the glitchiest space I've ever run. I should have done a different title, but here's what's going on. 100, you do have co-hosting. So what's going to happen is you're going to have to drop completely down out of the space, come back again, and then I'll select you as the co-host again because you're still the active co-host on my side. If you can hear me, go ahead and drop out of the space and come back, buddy. $100, try again. Yeah, man, it's not. All right, there you go. It looks like it added you. You good to go, 100? I can hear you now, finally.
Polish, can you hear me now? Polish?
Yeah, I can. Yeah.
Okay, all right. Just want to do a mic check. That's all. Okay, so first and foremost, I just want to say, there have been many years of research and developing a lot of different relationships and leveraging the amount of intelligence, not just with my own personal contacts, but people within different communities. And that would include the MMTLP community, that would include GME, AMC, and so on and so forth. So a lot of the things that I'm about to mention is a combination of intelligence that I have formed into a working theory that is backed by a tremendous amount of evidence that I've seen in the financial system. So I'm going to try my best to describe something that is highly complex and simplify it. And if anyone does have questions at the end, please, feel free to ask. So when we get into trying to track either a QSIP or an FTD, which is also known as an obligation, and that word is very important because it is used in Title 18 of the United States Criminal Code. And when we're looking at the counterfeiting of securities, it will play a huge role going forward, as well as inside the financial system when we want resolution to these obligations. Anything that is a U.S. asset-based obligation is tied to whatever monetary and fiscal policy changes come about. So it's very important to understand that from the legal perspective as we move forward into a new world, in my opinion, new financial world. So now going back to the QSIPs and the obligations that are trading overseas, you kind of get a gist of understanding that these imbalances happen for a reason, but and it's not just because of the counterfeiting and continuous borrowing that occurs in the derivative market, but more so it's important to realize the point of origin. And this is where things got really interesting for me, because when you try to simplify the financial system, which is very difficult to do, you start to realize that you really have to have a sound understanding of the settlement system and who the players are involved. So when you look at the
We lose 100. Hello?
Hey, 100. Is this space trashed? Can you guys hear me? Anyone hear me? I didn't hear any part of what 100 was saying. If you guys could hear him, I'm going to mute my mic. You for the past how long?
Just after his intro, pretty much.
Yeah, same here. All right. Well, it looks like looks like that didn't quite work. All right, let me do this. Hang on, you guys. Yep, bringing you back up now, bud. So, okay, man. So we didn't hear any of that. Basically, we heard the intro of your connections and contacts through the different communities, including MMTLP, and then that was pretty much it.
Right. So, okay. So now we're getting into the dynamics of the settlement system, and in order for there to be a clear understanding of where my point is going to lead into, is truly understanding how the ledger is managed in the CNS system. So whenever there's registrations at the state level, they have to follow SEC rules and regulations for registration. And when that security is listed, it involves the quotation of the security, and then obviously there's pricing built into it, and then the market makers get involved, and we have a market. Now, the reason why I'm bringing this up is because, for obvious reasons, when we go through the listing of a security, supply and demand are supposed to play. But I have come to the conclusion, at least for myself, reviewing the information that I've been able to do some research on inside the dark pools, or the ATS, is when reviewing the manuals, you notice that it's not truly about supply and demand. And I'm not saying just because it's compromised, with shares being borrowed, but because of the technology it's used for quotation in itself. And the best way I can describe this is when, let's say, you work for any institution and you're using Microsoft Outlook, and you send an email to a coworker or your boss, and the email doesn't get received, but it's in your outbox. So it's technically it's a message, right? That is a transmission that hasn't been received, but the sender sent it. So it's the same logic where you sell a share and you put it out into the system, and there's nobody there to buy it. But there's a twist. When it's quoted as a message before a trade is routed, it's already compromised and borrowed because of the way the technology is built, the AI is built. And I put a post up in the nest, and it describes what that technology looks like inside of an ATS, and these algorithms that trade inside broker accounts, they operate these trades outside of the CNS system, and this is where we get the X clearing effect. So you don't just have the technical, you don't just have the borrowing aspect of the share being rehypothecated eventually downstream, but you also have the fact that the algorithm in itself, once it's quoted, is already leveraged. So the obligation is already created. So when you have an issuer or a security that has a vast history, let's just say, and I'll give an example here of let's say MMTLP and metamaterials. So MMTLP is a preferred A dividend. It's not a company, it's just a security that was representing as a placeholder for an asset. But that one entity or that exists in the system was quoted as an obligation. And the reason why I'm saying that is because Metamaterials, which did a reverse merger with Torchlight has other mergers that were associated to it, other entities that were associated to it in the system. So each entity of its history is actually its own book, its own ledger. No different than Metamaterials. Well, Metamaterials, even though listed on NASDAQ, was supposed to be, it also was trading in Canada. So you have a history on the Canadian side that was, I would link back to Continental Precious Metals. The point that I'm trying to make here is each issuer or each security has a different set of books. And those books are the obligations that are associated to it. Now, when you go through a reverse split or a merger or any other type of corporate action, those obligations don't go away. The only time an obligation goes away is when a company is going private and completely gets put off the taken off the public markets, or and that forces settlement of the trades, or the company is basically put into the ground where bankruptcy takes place, and then a judge's order satisfies the debt and nullifies everything, so the obligation doesn't exist anymore. So this is important because when you're looking at any type of financial transaction, and I'm including the quotation of any security, the obligation is automatically created through autonomous trading. And there's protocols inside the ATS that prove that. Unfortunately, it becomes very difficult to have this argument in a court of law because the judicial system hasn't caught up to the constitutional arguments that need to elevate in that direction, which is in play. It is happening. But also it's the level of lack of knowledge and understanding the technology that's involved. So you can't develop a sound argument in a court of law unless you understand the technical aspect of this, and then prove that there is interference with the settlement of a trade, and there's interference with supply and demand when a bid and an offer is quoted on an exchange by a market maker, right? So it's very complex very quickly once the borrowing starts to take place inside the system. Now, once you have an understanding that obligations are rehypothecated outside of the United States, well, how does that happen? Essentially, when you had, for example, MMTLP, as I stated before, was created out of an obligation from a merger between Torchlight and Metamaterials. The the obligation was sent through FINRA to quote through an unsolicited quotation process that was available. And once it was quoted, these entities were supposed to be, it was not supposed to be trading at all, but the quote was listed and trading on the OTC illegally. The asset in itself, meaning metamaterials and Torchlight in itself was trading on the NASDAQ, right? So if you had a situation where the obligation gets leveraged and illegally listed on the OTC, which is what happened here, then you have to ask yourself a question. How did this obligation enter the foreign exchanges as well, not just illegally trade on OTC? The answer is when the technology that's involved dealing with quotation also facilitates the trade in itself when it either gets attached to one of three vehicles. One, an options chain, which did exist. Two, an ADR, an American depository receipt, which also did exist, and a contract for difference, which also does exist. So this obligation illegally listed on the OTC was also leveraged in the international markets as those three forms of derivatives. Now, once those three forms of derivatives trade in the foreign markets, they can be leveraged, rehypothecated several times over. I mean, you spin the bottle, it goes anywhere you want it to go. Now, what's interesting here is that inside of the ATS, there is a link to the OTC. And inside of NASDAQ, which is where this entity was originally, all these obligations were originally supposed to be trading, and in the Canadian market as well, but I'll just stick on the American side for now, you'll notice that there is a bridge of technology in the dark pool area, and that bridge is ARCA, Global ARCA. That technology in its origin was called Direct Edge, and this technology was created in 1998 and became autonomous and accepted from 2005 to 2010. Eventually, it evolved where all of the exchanges became a huge super ECN network, electronic network, that was working as an alternative system to the DTC. So essentially, you're building a super algorithm that's supposed to compete with the DTC. But in reality, it's Wall Street's best kept secret to clear and counterfeit any security you possibly could imagine around the world. And that opens the door for foreign actors to seed themselves into the U.S. economy and attack it. Because if you can create an infinite amount of debt and not be responsible for settling that debt, then you destroy the value of said property, right, in the economy or in the market. So it has a granular effect, and the whole purpose of this legally that you would see throughout the years, and many people would know this is a form of artificial liquidity that they seem to been able to get away with for a very long time. And they created these rules and regulations in the United States. A lot of this has to do with NMS regulation, ATS regulation, and then the securities registration of Rule 144. Now, I'm not going to get too deep into the weeds of that because it's all legality stuff, but those areas of interest are your points of origin that if you wanted to do a forensic audit and understanding of why the counterfeiting does take place in the financial system, you should look there, because a lot of the technical aspect of my argument and my theory comes there. Once you start looking at the relationships on how these algorithms communicate with each other, they direct the trades, but in reality, it's not just the trades, it is the messaging, the RF signals that they create, and they control to manipulate those RF signals as data points. And those data points can now be reconfigured through conditional orders and routed any way they want. So they act as external or unregistered exchanges that allow these obligations to move throughout the financial system and not be settled, because as many of people on this call might know, is ETFs become a feeding ground where the rehypothecation and the resettlement of the settlement, I'm sorry, the reset of the settlement clock happens in the ETF. So if you don't know that, please do research on it. It's very important to understand that. The way that the ETFs are built is they have counterparties inside them, and they have the ability to not just borrow securities, but they also have the exemption. They have a foreign exemption for custodianship. So that ties right into securities lending agreements, and then we'll get into underwriting agreements as well. So this is all legal stuff. I'm not going to get too deep into the weeds with it, but it all ties in, and it comes into play in the courtroom when it comes to property rights and when it comes to the chain of custodianship of that property, including its obligations that are tied to it. So I'm not sure how much more you want me to get into this without getting too crazy, but I left a few posts into, on the in the nest for anyone to review. And obviously I'm open to any questions going forward. And again, I know this is very complex. People might get confused. It's meant to confuse you. I'll try to break it down as best I can, but the technology aspect of this is just as important as the administrative aspect of this in the level of understanding. And the majority of people that participate in the financial markets, and I'm including judges, I'm including lawyers, I'm including institutional traders that are they're cultured in their own way. They don't even know this, right? So what makes my theory to come sound is when you start putting the pieces in the history together and you start having conversations across different platforms, and then you get the same results, knowing that when something is sold and it's not borrowed and it doesn't settle, something is wrong. So you have to look at all aspects as you possibly can. And I've decided to look at the technology, the technical aspect of this, to see, is there interference with the creation and trade of a security, not just in the US financial system, but outside of the financial system, and how does that take place? So really, it's a forensic audit outside of being an intelligence agency, trying to see and discover information as best you can without trying to interfere, too much.
So 100. First off, let me tell everyone in the room, if you've been requesting a mic or holding your hand up, just hang in there. I want to accomplish some really specific things during this space, and it's being recorded. And that's the reason I want to hold off on offering mics to anyone. I don't want to sidetrack things. I want to stay on point. Plus, Pedro's going to have to take off after a little bit here, and I want the two of them to be able to riff. So, using my analogy as the two different sets of books in a being run by some dirty business, would you say that the automated the trail of automation you've been able to track, and this question's to 100, and then I'm going to let Pedro and 100 take it from there. Would you say that the system is automated to the point where it can route it can disappear these FTDs into that second set of books in an automated way? Or does this still involve some hands-on efforty to pull this off?
So I'm going to give the example of GTS. GTS has manual processing built into it, into an automated aspect of how it performs its duties in the system as a market maker. So it's a combination or like a hybrid of both. So my theory is if you take a security and it has a history of 5 different companies before it, and that may include a Form D, meaning full deregistration from an exchange. That ledger doesn't go away. The obligations don't go away unless there's bankruptcy, or obviously if it goes private. So if the FTD were to go away, it only goes away as it's displayed on the FTD book that the SEC publishes, right? But it doesn't go away on the broker side, because the broker side has to keep that obligation active because they sold it. So when they sell it and they keep it on their books, and even if the entity changes name, there's a reverse split, whatever corporate structure it may be, there's a hybrid functionality that a like a GTS would have, or an Apex would have through the fractionalization of shares, to rehypothecate, restructure that obligation in any form you possibly could imagine, and then repackage it, put a quote to it, and then sell it on any exchange for whatever derivative product it may be, electronically, in an instant of a nanosecond. So
and by the way, so if Pedro's hunch is correct, and math is kind of proving it out through the idea about the reverse split not fully affecting these counterfeit shares, then if those counterfeit shares had been routed into this, I keep just talking about it in terms of this second set of books, that could also be a reason why they are sort of cordoned off from the rest of the legitimate shares that are affected the way they're supposed to mathematically be affected by the reverse split. So, Pedro, you want to ask 100 any questions or riff with them before we open up the mics?
I think I remember when Goldman was behind the creation of ARCA, because I remember when our Goldman reps came in 1999, and it was the first time I was able to have direct access to the markets on my desktop. Prior to that, I had to call my traders to execute everything. Every update, everything was done on the phone. And when they came in, they literally just downloaded it onto the laptop or onto our desktops, and I was able to buy and sell, and it was going through Goldman's pipes. So I don't know if they were behind it, but I think they were behind the building and creation of ARC.
Yeah, they absolutely.
Yeah, that's what I think. That's what I thought, because they were the first ones, and I remember at the time going like, "Oh man, this is highly disruptive." And then you see like folks like Wedbush getting busted for allowing literally thousands of anonymous foreign accounts use their direct access through the Wedbush pipes directly to the market. That opened Pandora's box to absolutely massive corruption, and at that point we still had an uptick rule, so they couldn't move stocks the way they wanted to until they got Bernie Madoff to get rid of the uptick rule and some other things. And then that really opened Pandora's box to all of this stuff. There's no doubt in my mind now that shares that are sold, and I think a lot of this happens on the payment for order flow side, where they internalize everything and they never let it get to a lit market, that's all done on an ex-clearing basis, so it's never known. And I used to kind of think that we just held digital entries and not really stocks. We don't own stocks. We just have a digital entry, and that's it. And it is the level of systemic risk to all of it, if it ever blows up, is mind-boggling. It honestly is mind-boggling, because then all this stuff is levered 10, 20 to 1 or more. So you can kind of see just how desperate they are to stop it, like an MMTLP. That is the frozen crime scene that they cannot let. It's not it's about the money, but it's more than just the money. It's about who was doing it and exactly what, and they're doing it across thousands of stocks. It's a business model, and everyone's heard me talk about it. It's a business model, and it's never, we all think buy low, sell high, short high, cover low. They have no intention of ever covering any of these. It is literally they're taking your money, and then I think the money's gone. I think the government is directly doing this. I think other things, and the money's gone, and all they do is just manage the liability going forward, and until the company dies or they can put it out of business. And it's very actuarial in nature. I won't go through that whole actuarial discussion unless somebody wants me to, but it's not happenstance. This is very sophisticated in terms of what they do, but their entire business model of trying to kill all these companies. And I always tell everybody to read the St. Small Cap on Deep Capture. It's the best explanation of the strategy of killing small companies that you'll ever read. Patrick Byrne wrote it 15 years ago, and the strategy hasn't changed a bit. But the entire strategy is based on regulatory capture. Period. You take away one or two things, and that's why they fought so hard to get this short transparency thing pushed out a year, because they didn't know what the fuck they were going to do. If it's suicide, right? If they had to report that they're short 4x the float, they're dead. The guys like Carl Icahn and whatever, and will build funds just to destroy shorts who file positions that are uncoverable. Look what happened to Melvin, right? Look what happened to Gabe Plotkin. As soon as he got exposed, they took him to the woodshed, and had to delay all these things in terms of the transparency stuff. But it's a business model that's dependent on regulatory capture. And if the regulatory capture changes in any way, if one little thing is pulled from that where they don't have the same control, that's where I go back to seeing all these wash selling events that are going on. It has to be related. There's no coincidences in small caps. There's just none. Unless there's just none. Somebody always knows. There's always a reason. And the fact that all these are happening in such a tight period of time, and they're all the same pattern, they're identical. They're moving the positions. They got the moving trucks, and they're doing it for a reason. And I think it's because they have to hide this shit, because there's a chance that the regulatory capture, they're not going to be able to have the same kind of control of the SEC, of FINRA. And you can see just the stonewalling. I mean, look what the SEC is doing now to NBH when they're trying to file their S1 and go public. They won't let it happen, because there's obviously a massive hidden liability behind the curtain, and that's just one small company, and it's literally times 1,000.
Yeah, I agree. There's a tremendous amount of regulatory capture that's involved, and the last few months, a lot of these veils of protection are starting to systematically break down. especially with new leadership in the country. So with POTUS and a new cabinet. So I think that dynamic with traditional finance is and regulatory capture is changing, and we're on the verge
I think
of
the big,
something
yeah,
very
I
important.
think that the bigger risk is that it's mutual. It's like pointing nukes at each other. It's like, and that's my biggest concern about all this is that, like, well, Mr. President, if you really want to go do that, you're going to melt the markets, because it will melt the markets. If they come out and said settle all the trades, it can't happen. It would literally melt the markets. You got the biggest hedge funds in the world that are levered 20 to 1, 30 to 1. It would melt the market. So it's like, okay, what do you want to do, Mr. President? You want to melt the markets? You're just into office. And look, there's no bigger supporter of Trump than me. Okay, so it's not a political statement. It is a friend of mine. Well, a buddy of mine from high school who went bankrupt twice, and now he has a G4 and made it. He always said, if you're going to borrow money from the bank, borrow enough that they become your partner if things go south. And so it's kind of true. It's like, well, okay, this is so systemic and this is such a problem. How do you even unwind it? And I'm so cynical and I've been around so long that I'm just like, what are they going to do now? How are they going to move the goalposts? And like, when they moved the short transparency thing out a year, I just shook my fucking head. I was like, Jesus, look at them. Because they can't. I've always said that you just give me one rule change, just make shorts file over 5%. You just give me that and enforce it. It will melt it will melt them. It will blow up the entire short cabal overnight if they actually had to file their short positions, including market makers, right? And Dirty Doug Sifu, right? If you recall, he led the petition to the SEC, and he got part of it passed, where any company, I think, if it trades under 30 days within a year of a reverse split. Oh, by the way, all these handoff events, every single one of them has had a reverse split. But he filed a petition with the SEC, and this is when he finally blocked me, is when I called him out on it. He basically built a trap door to bail his ass out of these massive counterfeit positions they're sitting on, because if it trades under $1 within a year of a reverse split or something like this, it automatically gets delisted. There's no appeal there. You can't reverse split again, whatever, because they know that they can't possibly hedge that risk, right? They cannot. You cannot hedge a massive naked short in a tiny little biotech. You can't do it. They know that the risk that's there. So you know what they do? They move the goalpost and they put something in to assassinate these companies as a backdoor bailout. It's disgusting what they do.
Yeah, he also changed it to be like, what was it, 2 weeks or to correct the below $1 requirement, even though the market maker exemption to settle a trade is 35 days. So they could push it down, and then it would go to OTC before in 2 weeks, and then they would have 2 more weeks to then cover if they did want to cover. But at that point, they don't even, with the liabilities they hold, they wouldn't need to cover, because a lot of people can't even hold stocks if they're on the OTC.
Correct. That's exactly right. And so it's all so obvious and criminal and disgusting. And the shame of it is, if somebody were ever able to sit down with the president and explain it in the right way in terms of killing jobs, killing innovation, anti-competition, that's how you get this to change. Because what Bernie Madoff did when he put in the Madoff exemption, and he was the lead advocate in July of 2007 to get rid of the uptick rule. I remember being on the buy side, and my boss was like, how much did we short today? I literally was trying to short 2 million shares or something, and we got 1,800 shares done because there was an uptick. And you sat on an uptick all day long. And if no one took it from you, you couldn't execute your short. You just couldn't. You protected companies, especially protected companies when they were trying to raise money. Because now, if a company even calls up a banker, the banker makes one bad phone call, it's dead. The company's dead, and they just drill these things into the ground. And that's the business model where whatever. But we can literally thank Bernie Madoff for like two of the biggest loopholes and regulatory things that allow for all of this to happen, which is the uptick rule and the Madoff exemption. That's it. And the whole thing is so obvious that they haven't unwound anything that the to date biggest criminal in the markets did. Kind of just tells you all you need to know.
All right. So
And by the way, Pedro, I've been spending a lot of time on Grok, going back and forth with him, and obviously he's feeding off of information on the X platform, because I've even seen him reference some of my posts and other people's posts that I know. But someone's working, probably that someone's a lobbyist, is working really, really hard to pump a bunch of information onto the X platform to make Madoff, to rewrite history and make it look like, yeah, he had this one little failed financial institution, but on the other side, his previous career, he was a golden boy and squeaky clean and everything was lovely. It's really interesting the way that Grok, is being trained right now. Anyway, go ahead, you guys.
It doesn't surprise me. Any
No, I
questions?
just wanted to tie back to you brought up Arca and Global, and Goldman, and the other companies that were involved with that was J.P. Morgan, Virtu, and Citadel. With the direct edge technology that evolved with Arca, and then when you look at anything that's specifically trading on the OTC, the OTC link ATS is divided within 4 different pipelines for the dark pools, and each one of them, they all share the same clearing firm, Apex. So the fractionalization of over-the-counter securities happens in a venue, not an exchange, a venue that allows these algorithms between the broker dealers to trade, to themselves, creating an artificial liquidity cesspool of counterfeiting around the world. So
that's right, and everything's clear, and everything's cleared on a broker-to-broker X-clearing basis.
Yeah. So when you centralize everything, let's say you had one group, it represents all of the brokers and counter brokers. That's one set of books, but it's one set of books that's got multiple tabs in an Excel spreadsheet, right, of every issuer, and that issuer could be divided into different subsections because it has a history. And then you have the DTC, which is the central settlement system, or has the CNS system, and they don't have to force the settlement of these trades because internally their own technology doesn't force settlement. They can keep FTDs alive for a very, very long time, and that's why they created something called the obligation warehouse.
They're partners. Why would they kill each other? Why would they call each other in?
Right. So this is where things get really complex when people are like, hey, but an FTD has a clock of 35 days, or 13 to 35 days, XYZ. But what you don't understand is the technology that's involved that compromises those ledgers and compromises the actual companies that are supposed to be, listed publicly on these exchanges without interruption with supply and demand. So it's a cesspool of fraud, not just administratively, but also technologically.
That's right, and it just all further supports my belief. Now I'm 100% convinced now that these shares, because they're outside of the system, outside of when I say the system, the DTCC, and they're not seen by the companies, that they're not captured in any kind of a corporate action. And so it goes back to very common sense. Like, why do they still care in AMC? Like, the stock's been destroyed since the reverse split, all this other stuff. And there's no question that at least the float was short going into the first reverse split. But what happens if, let's say, 3 times the float was short, but a lot of it was on an ex clearing basis? Well, even despite the dilution from the company, they're still short the same amount. So it was 365 million shares out in the float of AMC when they did the 1 for 10. That goes to 36.5 million. But if the short doesn't get divided because it's counterfeit, well, they're still short 325 million or 600 or 800 million or billions. I actually think it's in the billions now, because why would they care? The stock's been so beat up, but you still see, I was saying before in the beginning, is that I'm just kind of I don't believe in coincidences and certain stuff, and I look at what I see, and I'm like, they're absolutely care about marking AMC down for quarter end, for month end, for year end. When it runs, they call in the bat phone to get them to sell more shares. Why do they care so much if it's been so decimated? The only logical reason to me is there's a bigger liability behind the curtain that any of us can even imagine. And the only thing I can get to, based on these massive wash selling events that I highlight every fucking day, that are so absurd, that the only explanation, in my opinion, is shares that are sold into the system on an ex-clearing basis do not split on a reverse split. So now they're managing these massive counterfeit short positions. That is why you see the volume events that we do. That's how you see 158 million shares of TRNR trade in a day off of a 1.5 to 2 million share float. And you see, my buddy highlighted that he had a screen grab of a 573,000 share bid come in. And that's 40% of the fucking float. What it was that they were trying to do a wash sale and a handoff, and something got in the way, and that should have just been executed from the left pocket to the right pocket, but it just shows. And you're like, wait a minute, how in the fuck some retail trader just happened to decide 73,000 shares of a stock that has a 2 million share float? It's a fucking joke. No, what it is they are wash selling massive. When I say massive, I'm talking 4, 5, 10% of a float of a company that they've built over years of just selling every share that comes down the line, because they've marked this company for death. And then when they have to move the position to avoid an FTD or to hide it from regulators, they have to move the position. They can't cross this position, because when you put up a cross, it leaves a very distinct breadcrumb. You have to have a beneficial buyer, beneficial seller. You put up the trade, it gets crossed. The regulators come in and they can see that in a second of who the buyer and seller was. They can't possibly come in and say, well, yeah, it's the same buyer, same seller, and they just crossed 42 million shares. They have to wash sell it in the cloud of chaos of all this volume, and churn it and churn it and churn it. I always use the Jack Reacher movie as an example, where it was really an assassination of one person, but they shoot up the whole courtyard to hide the real intent. And that's what goes on in this stuff. They're moving this massive counterfeit position, and then they just churn so many shares that it makes it next to impossible. But if you drill down and look at the 1 minute, 3 minute, 5 minute stuff, it's literally the only explanation mathematically is that these are wash selling events. That it is impossible for there to be natural buyers and natural sellers. It's impossible. Unequivocally, not even a 1% of a 1% probability. It is 0% that this is real. It is internal moving of shares, period. And that's just so fucking illegal. I mean, a first-year SEC investigator could figure this shit out in minutes. 1 day of phone calls.
I actually
they
have
could drill
evidence.
down and say, who? Go ahead.
Oh, I actually have evidence exactly what you were saying is like you can see them passing the bag around. I just put it in the nest. It's I was looking at the different banks, and they all have like 1 day where they have like huge holdings, and then it goes back to normal, and it literally changes which day they have the huge holdings. And so it's like they're literally just passing these bags around. And I think Yeah, I mean,
Musical
I
chairs.
think that, yeah, it's musical chairs. And I think that the thing is that like Ken Griffin said, they aim the price at their target that they want it to. And so they just have these algorithms that, you know, are scraping a bunch of different data, you know, rates and whatnot, but also just like what price targets get put for things. And that's how, like, it all just goes automatically balancing liability, basically, like you were saying. And I just realized recently what that algorithm is based off of. And that was, you know, I've been looking into like the Solana meme coins, and I didn't really realize how they work, but like they don't have an order book. All they have is a liquidity pool. So like if you launch a token, the first like $60,000 or whatever just goes into this liquidity pool. And then the algorithm kind of takes the rate at which people are buying and whatnot to then like simulate a price. And all of our favorite person, Doug Sifu, um, who I'm honored to be with you guys since you're on the top of his list, is
I'm
he actually Virtu.
I'm proud of coining Dirty Doug. It's the best name
Yeah,
for him.
yeah. And so Doug Sifu and Virtu Financial, they did a deal with Radium, who they manage the market making for Solana. And like that's I think how the whole scheme is based. And there's all these companies that I'd have to like look up. I had like some different posts or I talked about it, but where there's some company that you know like 100 was talking about, they all they sell their data into this pool of data, and I don't know exactly how they're using that. I think it's to calculate their liabilities and whatnot, but all of this is going through. I think that the AI is basically just finding whatever, so they aim it at a price. They know how much the liquidity pool is, how much money is pooled up there, and the algos just determine how to best kind of approach that and
Yeah, matching.
suck liquidity out.
The matching technology. Yep.
Yes. So all they have to do is say, like, they would look at it and say, okay, there's this many millions of dollars worth of liquidity in this stock. And we think that, you know, news is not going to come out, probably bad news can come out. So we're going to suck that liquidity out now. And then they just run those algos to do that. And the AI can match up whatever it needs to match up through, you know, whether it's a contract for difference tokenized share that gets ported in, you know, under the guise of saying, you know, it's because banks that are international banks somehow have this loophole where they can use cryptocurrencies and not get in trouble for it. So they're using literally tokenized shares that are contract for difference. Anyway, it can balance whatever, you know, legal liabilities and all that stuff to just make up for, like, using AI, doing it really quickly and passing that bag around, just to aim it at the right target so that they can suck the amount of liquidity out of it that they want to suck out of it.
People have no idea how devastatingly toxic and what payment for order flow does for these guys. And it's why years ago, Citadel and Virtu literally sued and petitioned the SEC to ban payment for order flow because they didn't have it. Knight Securities did, right? And way back when, Knight Securities, I was tracking their securities sold, not yet purchased, in 2010. And guess what? Knight blew up in a day, less than a day, because they had a software glitch that melted like a third or 5% of their counterfeit book. We saw stocks go from 1 to 20 and 20 to 1 and all crazy shit for like 3 hours, and that was it. Knight was out of business. And then all of a sudden, you know, Casey, they couldn't let Knight actually be liquidated because that would have blown up the whole cabal. So then they put together a group to buy Knight over the weekend, and then miraculously, Virtu buys KCG Holdings. And you go back and look at Virtu's chart when they finally got the order flow. That's when that was the golden goose. But the golden goose for payment for order flow, I've said it a million times, it should really be called PFCD, which is payment for customer data. It's the data. You can do, I remember doing the math on just what they paid E-Trade for their shit. And they literally, it came out to, I think E-Trade has like 3.9 million accounts. and every account, if they made a tenth of a penny on every trade, every share traded, they would just get back to even on the money they gave E-Trade for the payment for order flow. Every single account of E-Trades would have had to trade 125,000 shares a year. It's impossible, because I assure you that 80% of E-Trades accounts don't trade at all, barely. They might do 15 trades a year. I have a friend who owns an RIA that's domiciled, and they don't trade. So how are they possibly getting their money back if they're dumping $1 billion over to E-Trade? They're getting it because of the data of what they're seeing. They see average cost basis. So if you can capture 80% of retail via payment for order flow of what everyone's doing, they know everybody's cost basis in a particular name. They drill everything down. I have a buddy who was sued by the SEC, and in discovery, he found out that the SEC can provide what he saw. He goes, dude, I could see the counterparty to my trades. I could see their social security number, their address, everything. He said, I was scared of what I saw in terms of what they can see. And so payment for order, what they're paying for is the data. So they can see millions of retail of exactly what they're doing. And they also have keystroke technology built into the broker dealers, so that when you're typing up your order, the payment for order flow brokers see the order being built before it's sent to them.
Yes,
it's literally it's that fucking criminal. I asked Dirty Doug literally 100 times, Doug, yes or no? Does Virtu use keystroke technology? Have they ever, or do they use it? Simple yes or no question. If they didn't, why wouldn't this guy who can't shut his fucking mouth, why wouldn't he just say, no, we don't? They do. That's how rigged this shit is.
You'll notice that if you're a trader, I'm sorry. Go ahead. I'm sorry.
Go ahead. No, go ahead.
No, you'll notice that when you're a trader, when you put in your order, and all of a sudden, the same amount of shares that you put up, especially if it's a large amount, is right on the offer. It's right on the offer, ready to get sold short.
100%. Yeah, I mean, I could go into anecdotal stories of buddies where they're like, they got me cornered, and they'll literally, if they're long or they're short, they're out over their skis and they can't hold the position overnight. The exact amount to cover or to sell shows up on the bid or the offer, and I've seen stuff where they've logged buddies of mine off and liquidated their position without even telling them. I've seen that happen. It's payment for customer data, and you can even see Sifu's getting sued. I posted 1,000 times that he literally he always claims that they don't have proprietary traders. Well, that's funny, because the SEC is suing him because he gave out. The prop traders could literally log in and see their institutional clients' trading data and shoot against them. That's how dirty these people are. They literally will cheat every single chance they get, and they'll use any level of technology to do so. And with internalization and also, but the entire thing is based on regulatory capture, all of it. And I will submit that it's like Jenga. You take out one piece of it, it could be chaos. And that's what I'm seeing from all these big volume events that are going on, is that they're not scared, but they're in motion. They're doing something for a reason.
I just have I'm curious. Your buddy that was liquidated, did he have direct access or no?
No, nope. Just his account was at Schwab. I think his account was at Schwab, maybe. But he was like, He called me. He's like, they got me. And it was just, and I even saw it in real time. He's like, dude, I'm short, 82,000 share, 82,500. And then here comes that offer. And then he also showed me how they liquidated and the message he got on the liquidation of it on a different position, where they literally, he was up on them, and they logged him off and liquidated him out because they needed the shares back in. I mean, I've seen all sorts of shit.
Hey Bam, can you put me back as co-host, please?
Yeah, hang on a second here. Okay, there you go. So you guys were mentioning, one thing I wanted to talk about is when people mention, you use the term the algorithm. It might be interesting to some people out there listening that it's not the algorithm. It's not one algorithm. It's literally, from what I can see and the recordings I've made and all the deep dives I've done. And this also makes more sense if you really think about how you'd pull this off from a tech basis. It's individual algorithms running off of every time frame bar, and shooting for every price on the time frame bar. That's why I tell people it's so important to pay attention to the time of day that price moves either up or down, literally down to the 1 minute bar. I mean, if you really care about this stuff, down to the 1 minute bar, the 5 minute bar. I mean, everything 1, 2, 3, 4, 5, and all the way up the ladder, including days, weeks, and everything else. Because what they can do when Griffin talks about it's our job to guide price, or whatever he said, to determine the price, it's not as hard as you would think, because number one, the volume is so inflated compared to what natural volume would be if it was just a bunch of legitimate people buying and selling. So they inflate that volume as a way to sort of hide what the days to cover data would truly look like, make it look like it's not that big of a deal. But then more importantly, that way they can throttle on and off volume into these bars and timestamps, especially into the last little sliver of any timestamp, so that they can post that closing trade. And that's also why it's important for them to strip away and dark pool and break round lots into odd lots and everything else, because they don't have to use as much firepower into that final second or 2 seconds or nanosecond to get that print. If I can get that print on that time frame bar, I know just through reverse engineering the effect I'm going to have on all the technical indicators. And that's the real key to this thing, because if I can reverse engineer and game technical indicators, then I can spend $100,000 and get $10 million worth of bang for my buck, because I know I'm going to trigger a bunch of other algorithms that run off of standard out of the box TA stuff that people track, MAC, DRSI, stochastics, all that stuff. So anyway, don't think of it in terms of an algorithm. It's literally like running every single time frame. And if you pay attention to when they really want to either strip volume out of like a 1 minute bar, a 5 minute bar, the 60 minute bar, or when they really want to pump volume into it, pay attention to where they wanted to close price, and then think in terms of which algorithms are the most active, because sometimes they'll virtually have some of the lower time frame ones basically shut off, and especially when they go through some of the ping ponging. But then there's times when they're super, I'm sorry, opposite. It's super active when they go through the ping ponging and the barcoding. Anyway,
there's also, to add to that really quick, you think where's a lot of the crime happening? Well, it's like outside of the U.S., right? Because that's where they have more leeway. And so, when they trade, in order to bypass like stamp laws and stamp taxes and whatnot, they trade them in baskets, where each basket will just kind of have like a label on it. It'd be like, okay, well, this is a meme basket, or this is a, industrial, or this is a, cyclical, or whatever. Like they have all the different baskets, and there's lots of money that's trading through that, and they're just buying them as quick as possible. And so they'll just have like these general kind of seasons, I guess, where it's like, oh, well, this news comes out and that like sets the tone for what baskets go up, what ones go down. And then the algorithms then aim each one at that, so that they can pull as much, like get as much bang for their buck, whether it goes up or down. Like, you know, as much as they want to short companies, I mean, they also want to sell institutions at a premium, right? So if they see that the institutions are going to want to buy in, well, they're going to front run them as well and force the price up quickly, so they have to buy at a higher price. But
Yep.
I mean, yeah, like I think the algos are balancing all that information, and there's certain levers they can pull, mostly through the news.
Well, so that's funny you mentioned the baskets, because, you know, in the time and sales that I track and record, under the condition category, you literally have burst basket, right? That's one of the conditions is burst basket. And so you can see how they weaponize burst basket trading to do their ladder attacks. And it's interesting because I've spent a decent amount of time trying to go look around and figure out the common tickers that are inside these burst baskets, because you have no visibility into them. And they could be selling, the burst basket algorithm could have 100 shares of one ticker and 100,000 shares of another. There's no way of knowing. So I was looking around trying to find some commonality between different names like AMC and GME and Mullen and whatever, and try to see which ones were most likely involved in the same burst basket attacks. But that's absolutely a key part of this ballet I talk about, and some of the information I passed off to DJT and some of these other tickers, is the way as they dark pool shares into a pressure point where price is about to break out and continue an uptrend. That's when you'll see volume drop off. Once it starts to expand, they drop it off. They dark pool, they break round lots into odd lots if they're close enough to make it not too obvious. And then on the other side of rolling over the top of the mountain, that's where they attack with the burst baskets and ladder attacks with, non-burst basket trading, but really aggressive burst basket trading where they'll do, bid ask on the way down. So yeah, it's dirty.
It's beyond dirty. I mean, it's now you add in payment for order flow, and if they can see everything, and and I always say that they make, if any of us on this call buy 5% of a public company, we have to file within, I don't know, 4 days or 8 days or whatever. But if you short more than 5% of a company, you never have to file. You could short 100% of a company, you never have to file. The fact that our SEC is protecting short sellers is the most absurd thing. And I always say that that's the easiest thing to get changed, because there's no defensible argument of why our regulators should be protecting those who are shooting against our companies. And the reason why they were able to get the extension is they went to the SEC and said, you can't do this because we'll be bankrupt. If we have to actually file our short positions until we can hide them, we need time. We need a year. And it's obvious. It's obvious that would blow them up. So I just keep going back that I just hope that we do get some of the that they bust up tear the whole SEC down and start new with a whole different, put it under the Justice Department, do something different. If their regulatory capture goes away, we will see big bankruptcies. We will see, and this goes right to the big money center banks. The liabilities are so giant that I don't think anybody can. I don't even think anybody can really comprehend just how big the short liability is.
But that's also why they're going to need to use a lot of finesse. And you and I haven't been naive enough to talk in terms of this MOAS, mother of all short squeeze and all this stuff, just because we've been around long enough to watch the way they handled long-term capital management in '98 and then the financial crisis in '08. And the game has been to become so systemically risky, so big that you're too big to fail. Then you're in the club, right? Then you can do the reckless stuff and know you have backstop. When you win, you win, and when you lose, you're okay / win as well. So hopefully the biggest mistake these guys made, probably I would say, is going after the DJT ticker, specifically aggressively shorting it before they tried to kill him, because I think that there's a lot more discovery around that for the people who are looking into it. And then the fact that Griffin insulted Nunez publicly Not a smart thing to do, and not really out of character for the guy. The guy's usually, pretty stoic and, matter of fact and robotic and everything else. So that surprised me. But, they picked a fight because they didn't think, number one, the people that picked the fight to short the DJT ticker thought they were going to be successful in killing him, obviously. And so that surprised them when that didn't happen. And then literally, and then obviously when he became won the presidency, now they're even more screwed. I mean, think about how arrogant you'd have to be that reckless to go directly after Truth Social and the DJT ticker. I mean, it's one thing to just go off and do your thing, to be corrupt and do your dirty dealing, but I mean that takes hubris out the yin yang to go after that ticker. So obviously they didn't think there was any chance that this current administration would be in power. So anyway, hopefully what they'll do is I'm 100% positive they already know what's going on and how big the problem is. It's just a matter of how do you gracefully unwind it. I'd be all for just a pseudo win or a decent sized win for retail and all the rest of the people that have been through all this stuff, but well short of causing total chaos. And you could do it. I think you could do it. I mean, if you could do the rug pull they did on Lehman in 08 and still recover, then even if they pull a lever too hard and make a little bit of create an accident, you can still mop this stuff up. They're sad
I don't know.
to do that.
I'm not seeing any signs of it. What I'm seeing is trucks leaving the factory in the middle of the night, moving something somewhere. And my concern is that it's like Refco in 1998. I remember I was in the business and they just buried like 400 million naked short shares. Refco was a naked short fund that blew up, and then the broker dealers who primed them were like, well, we can't handle this because this will hurt us. So they just screwed retail and they permanently diluted all these companies and they moved the shares into the obligation warehouse, and that was it. Part of me is like wondering, are they just moving these shares into something like that, where this is like some higher level, because it's so systemic that they're just moving the biggest systemic issues into
that's what I was going to say. Well, right. What if it's part of the dance that they're doing to finesse the unwind?
I don't know if it's but that's not finessing. That's screwing retail, is what it is. It's bailing out. That's bailing. That if that's the case, then they're bailing out the market makers, and they're permanently diluting these companies, and they're letting them off the hook because they are so systemically risky. That would be the thing.
Well, think about the way they did the clean slate approach with Reg Show, though, Pedro. So they're already the retail is not their top priority. I'm just hoping that they score some kind of a pseudo win. If they don't, then yeah, you're right. This will be they'll lose all of their supporters. Put it to you that way, right? But remember with Reg Show how they basically said, hey, what's done is done, right? Well, we can't really go back and address all these counterfeit shares. But hey, we have this new thing called Reg Show, and so from now on,
they grandfathered everything in there.
But anyway, who their real target is, in my opinion, is the Federal Reserve and the central banks. And I think that retail just happens to be a good weapon against them. So it's like whether or not they let MOAS happen or whether they give some, big settlement. I think the easiest way is just to do a settlement, and then they would know exactly what the damage is. They go in, take, conservatorship of like things like the Federal Reserve and whatnot, because it looks like they're moving towards the Treasury and just a sovereign wealth fund. And so I think that just like conveniently, one, it helps us, makes us happy, but also it will it will take down the power of the central banks, which is the main problem in like this whole crap hole we're in.
That's a great point. I like that idea. Hey, Susan, go ahead and unmute and fire away. Thanks for joining us.
Okay, thanks you guys for having this space. I'm just curious to know if you think there's a way for us to go on offense. If you think that there's a chance that the new SEC, the new administration, is going to do something about this, maybe there's an opportunity here, and rather than looking at this as a bad thing, is there something we should be doing, positioning our accounts in such a way, buying certain stocks to maybe somehow benefit?
I think your best bet, and this isn't financial advice, but I'm not even going to touch the financial aspect of this, but you should be communicating with Doge SEC, their handle, sending them messages. You should also be communicating and applying pressure with your local and state representative and asking them to get in contact with oversight, financial services, and even the executive branch, anybody that's there. So that's newly in a position, maybe even a staffer, and may be able to help your concern to the highest level. So that's how I would suggest that all retail investors should be doing at this time, especially since it's a sensitive time that we actually are restructuring.
Well,
Right.
to me, that's a little bit more of a defensive posture, something that we've been taking all along. Should we direct register our shares to protect ourselves from this activity? And it sounds like that doesn't really protect you. And many people have actually sold their positions and they've gotten out of these tickers. What I'm asking is maybe we're looking at an opportunity. Maybe we should be buyers rather than sellers.
I think you got to
Well,
find something actionable. Like you got to give ammunition to the people that are going to actually like pin them against the wall. For me, I've been doing a lot of research on Doug Sifu, and it's like, because we can't see behind the curtain, right? So it's like, well, who is he working with? Like, even like I put something on the nest, like the treasuries, like how did Virtu Financial even come to be, right? It came to be because there was a need for JP Morgan to have market making for treasuries. Well, why didn't JP Morgan do it themselves? Well, because they didn't want to get in trouble for doing things illegal. So they had a little company do it for them, that if they got caught, they wouldn't, JP Morgan wouldn't get in trouble. And so I think that like Virtu Financial exists solely to abuse settlement loopholes, so that when someone buys a treasury, they can then not actually buy those treasuries and just like invest that money on like the discount window overnight. I mean, they can make millions of dollars every day, lending out all that money on for the treasury bonds just on the discount window. And so
it's one step. It's one step move from J.P. Morgan.
yeah, and they're pretty close. And so the more kind of like if we hand it to them, it's like, hey, look, we know that if you go in there and you look at this exact thing, you're going to find that. Then you'll get like that way. It doesn't take a whole FBI, group. Like literally one person, one FBI agent or whatever can just go in. Yep, we found it. Thank you. And because we know where the bodies are, right? A lot of us, each of us have kind of explored different parts of it. We know where they're hiding, but we have to help the people that actually are going to be able to go in there and do it, find the bodies.
Well, first you have to find people.
That's how you go on offense.
So speaking for myself, and I'm not going to touch the whole financial advice part of this thing either, like how do we benefit with tickers, but speaking for myself, everything I've done is offense. Everything I've done, including I'll mention it again, I was approached to record and hand off time and sales data and some of the other stuff I'm tracking behind the scenes on the DJT ticker specifically, after I'd already done it for AMC, GME. I mean, a year worth of AMC, terabytes, multiple terabytes of data, but for GME and for even Mullen. But my dealings with people at the highest level are the highest on the DJT ticker. I mean, I was on the call with Nunez's lawyer and some other people who are super savvy Wall Street people. We uploaded the password protected video, and we could monitor views, and so I know people have seen it. So that's my version of being on offense, is to hand off all the evidence I can to people who are in a position to to pull these levers. And, that's why I keep saying, I believe, either you believe everyone's corrupt or you believe there are some good people behind the scenes. But once once they start to become educated and they open the hood, lift the hood, they see that this is a huge systemic mess. And so I would imagine they continue to have these strategic meetings of how do we do the unwind, whose nose do we bloody the most severely, and how do we help these other people benefit who elected us into office, who have spent all this time, bird dogging all the problems and the bad actors. And so that's why I keep calling it a 360 win. I've been talking about it for 3 years. I'm shocked that it hasn't already happened, but now we have a new, administration. And so we'll see we'll see where we go from here. But I'm pretty optimistic, especially with Doge moving into the area that we want them to look into. The other areas are fantastic, don't get me wrong, but now they're lifting the hood in the area we want them to. And through the use of AI and everything else, all these dots will be connected. I mean, you cannot hide this second set of books offshore. I mean, we're in a really good spot here to have things really change, I think.
The reason why it's important to put stuff in front of Doge, even if it's just as much as you can, is that we have to, Doge has to, the very acronym is whatever, Department of Government Efficiency. So the general premise is to look at fraud and waste, monetary fraud and waste. What we need to do is provide enough pressure on that organization where they say, holy shit, there's more to this. It may not be that, like, I'm personally not expecting that the SEC is spending money like US aid, right? We're not going to find out that the SEC is using their money to fund terrorists and different organizations. We all know that the SEC's captured, okay? We do, where they're captured by look at Dirty Doug. He calls Hester Pierce his fucking queen. Why would the CEO of one of the largest market makers refer to Hester Pierce as his queen? Literally, I mean, think about that. She's sworn, that is one of the biggest institutions that she is sworn to regulate, and that fucking guy calls her his queen? What is she doing for him? So
yep.
by staying in front of
the
Doge,
bearded, he said the bearded queen, didn't he?
Yeah, it's as important as ever to try to get Doge to jump the tracks, right? Because if they stay just on the financial shit with the SEC, I don't think there's anything there. I never thought the SEC.
Yeah, and I'm not talking about that. You have a guy, you have a guy, Elon Musk, heading this up.
But what I'm saying is
heading this up, who had his ticker attacked and also has gone head to head with the SEC himself.
I get
so there's
that.
no love there.
I'm referring specifically to Susan's question of what you can do and why. And you can look at a bunch of these things, and it'll be binary. If it all blows up on them, we're going to see literally hundreds of GMEs, hundreds. There are literally hundreds, if not thousand, potential GameStops out there. But trying to predict whether we're successful or not, and it all falls apart. Let's not underestimate the power and control of who's in charge here and who's doing this. So you have to be realistic and honest about that. So you have to pay attention to that. But from an actual standpoint is we want to put enough pressure on Doge that they go, wait a minute, we came in here to look at the efficiency of this regulatory agency. Financially, generally, they're looking for fraud and abuse in the monetary of how they're spending their money. But we're getting so much pushback on other shit that we need this. The fire needs to jump the road, and we need either an inspector general or something else to look at what the other parts, the regulatory capture side, that's not part of the efficiency. It's just how captured they are. I mean, you can do the same thing for the FDA. The same thing needs to happen to the SEC, needs to happen to the FDA. Both are 100% captured by the industries that they're supposed to regulate or kind of admit, right? Big Pharma controls the FDA. They make it onerously difficult for companies to get approval, and it's so much money. And then you same thing with the SEC. They're beholden and captured by the market makers and the big hedge funds. No, you're not going to do that. No, you can't make us file our shorts. We need an extension, all this other bullshit. Our job is to put enough pressure on Doge. And look, we know that Elon Musk, what his position is on the SEC. Okay. We all know that. And we all witness it. If you're old enough, you remember when they were trying to kill his company and put him out of business. And then they sued him and sued him. They just got done suing him for his 420 tweet. Like, I think the suit just ended, whatever. The Overstock shorts were still suing BYON. I think they just lost their last appeal 3 months ago. These fuckers never give up. They never give up. So we need to put enough pressure on Doge that you hope that the fire jumps the road and they start really looking at the entire organization from a captured standpoint is the way I'd look at that. Whether it's small name, the smallest, ugliest names will go up the most, but they also can go to zero. So you can't really pick a name because you want to trade them, and you look for the ones that are popping, and you want to day trade them, you want to flip them around. That's fine, but it's not an investable strategy to buy a bunch of these and say, okay, we're going to win. It's just dumb. You just can't do that. Anyway, I'll shut up now.
No, that's good feedback. Hey, let's bring up our good friend who's been the king of pumping out these incredible documentaries for the past year, AMC. Unmute your mic, buddy, and come on in.
Hello, I'm not sure if you can hear me.
We can hear you, bud.
Hi. I'm not as keen or detailed as some of you on the markets. It's mainly historical documentation or me reviewing things in a chronological order that I really get behind. So just listening to all of you, I've been learning a lot, especially from Pedro, from BAM, from Michael AME I've been talking to for a while. I really appreciate all of you. Sam as well. So thank you for having this, and I'm learning a lot from it. I honestly don't want to get too much into it because originally when I invested in AMC, I didn't know anything about the markets, and now I feel like I don't even know that much, but I feel like I know more than I ever wanted to.
Same. Oh my gosh.
Yeah, I know the feeling.
Like I didn't like similarly. I don't have this like depth of experience, and so when Susan was saying what can you do on the offense, for me, like I've been diving in to look at, just wherever somewhere I can kind of pull on some strings and find something, put in some of the legwork. But like I have to find people that actually have the experience in the market and can add in the details, because just like I wouldn't have enough information. Like if the FBI came to me and like, hey, where exactly in Doug Sifu's house or his workplace are the dead bodies, like I wouldn't be able to exactly say how to do it, but I know other people would. They're like, oh, well, there's gonna be this program, it's called this, and then that file is called this, right? So it's like we do all have to work together. We all add something to it. And also, just bringing public awareness, right? People have to let the general public know why this is important, or even the general public servants why this is important for them to help be part of, or even the elected officials. Like it's like shocking how many elected officials don't really know how the market works, or everyone has this kind of niche sort of knowledge, and that's what the criminals exploit, is everyone's blind spots. And that's why like it's so important we all work together. Is we all have different blind spots. When we come together, hopefully we can shed light on the whole thing and everyone can see what's going on.
And just in case there are new people in the space that haven't even been following this whole saga since 2021, there are some people who are still sort of involved because they really are just looking out for their own self-interest and want price to go higher to either recoup some money or make some money. But there's a core group of us that have been working on this stuff because we realize that these dirty dealers have destroyed our markets to such an extent, and especially the small caps, which is sort of the lifeblood of jobs and all kinds of things in the United States, and especially our competitiveness around the world. They've destroyed this stuff to such an extent that not only are they taking out all of these companies that could provide, like I said, jobs and new tech, but they're taking out, like Pedro talks about a lot, up and coming potential cancer, companies working on cancer drugs. And then in my mind, even more importantly, is the fact that I talk to a lot of the younger people through DMs and things like that, and I listen in on crypto spaces and things sort of anonymously. And these guys have managed to absolutely break the trust of an entire generation, maybe two generations underneath us, that are convinced that the financial markets in the U.S. are so corrupt and banana republic that they've left. They've gone over to crypto. Of course, a lot of them are being scammed over there too. So it's just it's a bigger picture fight that we're fighting here. And so again, I'll second what Pedro said. Absolutely turn over any and all information you have to Doge. They're raising the hood, and I believe the raising the hood is really allowing them to expose much more corruption than just mismanagement and that kind of stuff. I mean, if you look at the announcements made so far, the majority of the words they're using are, fraud and waste. So,
and abuse.
I'll chime in there. I'll chime in there real quickly. Just based on my experience, which is 30 plus years, what I'm seeing in these wash selling events, I cannot overstate how fucked up it is. I cannot overstate it enough. And the timing of it is not a coincidence. And there's something going on. They're moving shit. I've watched stocks for 30 fucking years, and I haven't seen anything like I've seen in since December 1st. This is this is like troops moving. This is like literally getting intelligence that they're moving troops to a certain border or doing something. It is that obvious to me, and it cannot be more obvious of what's going on in terms of something's going on. In 30 years, I've never seen anything like I've seen since December 1st of this year. So,
Hey, Pedro. Pedro, did you just happen to start watching this December 1st? Or are you saying that you think that's about when it started? Are you saying that this is a post-election phenomenon?
It is. I think it's absolutely a post-election phenomenon, because they were like, "Oh shit, we kind of know what's coming." It's like the whole U.S. aid thing. If you don't think Elon Musk and Donald Trump knew exactly where to go look right when they got into office, right? They just happened to, within a week or two, just find all this shit. They had a whistleblower. They knew this shit long ago, and it's the same thing. I think the criminals who were doing this when Trump won, they were like, "Oh shit." Going back to December 1st, Susan, I just started noticing it. So I just watch correlations. I watch patterns. I just look for shit. The first thing I do every morning when I wake up is I use Market Chameleon, but you can use any pre-market screener. That's literally the first thing I do. Make my coffee, get up, and usually up by whatever, and then wait until 7 a.m. And as soon as 7 a.m. hits, hit refresh and see where immediately within the first 3 to 5 minutes of 7 a.m. to 7:05, what's hitting the volume charts on the pre-market scanners, because it's impossible that people are just getting up and trading that fucking ticker. Okay, that's just laughable. The funniest was like the half day after Christmas, when I forget what name it was, traded like 18 times its float in the first 6 minutes the day after Christmas. It's like, okay, yeah, all right. So you look at that, then you go look and see what the float is, and you check if there's been a reverse split. You're like, check, check, check. And I just started seeing all these things popping up, because I was tracking this stuff. I watched IZEA. Little IZEA back in 2015, 16, traded 495 million shares in 3 days, and it had an 8 million share float, and I knew the CEO personally, and he was like, "What the hell is going on?" And I've been trying to tell him that he had a massive short in his stock. And that was the first wash selling and the first thing I started watching. That and like Fennec Pharmaceuticals, which was a child's cancer company, when they would wash sale that thing back in 2012 and 13. So I've been watching this shit for a long time. And you put volume alerts, you look at volume leaders and stuff, and you just start seeing the pattern over years. And as whatever, then I just
so
noticed
the frequency,
the frequency accelerated.
Pedro, one thing,
it went from 2 to 3 times a
the
month.
frequency per ticker though, right? So what's key that you and I have talked about is if the frequency increased, but it was frequency over a bunch of different tickers, maybe it's not that big of a deal. But the fact that they have to wash consistently every so often, the same ticker is different from what we've seen. Yeah.
So for 10 years or more, it was like, okay, two to three times a month. And my buddy and I, we used to track that like within, I forget what it was like a company would do a reverse split. This was back in like 2013, 14, 15, 16. We tracked this shit for years. We're like, wait a minute, that's weird, because we started seeing like a reverse split within a year of that reverse split. We saw this massive wash selling event happen within 52 weeks. And it was always like, we actually gamed a few of them. We're like, let's start taking a shot here because this one should pop. And we hit a couple and we were like, there's a reason here. And that was way back when it was like a year. And now, then if we started watching them and different stuff, and then it used to be like 2 to 3 a month that you would see these big, weird, unexplainable volume events. We knew what they were, that they were moving the position. It wasn't natural buying and selling. And then since the election, I just started noticing, getting up in the morning and looking at the market movers pre-market. You're like, wait, well, what this isn't random anymore. This is a pattern. And then you start watching it. You're like, okay, here we go. Now I wake up literally expecting to see 2 to 3. And it's, oh, there you go, there we go, there we go. And if you follow my thread every morning at like 7 a.m., I'll post 1 or 2 or 3. I tag Kristen Shaughnessy. She retweets them because it's like anybody paying attention. And so that's what I'm trying to do is just, and then you get the Sifu minions that come in and be like, no, it's just high frequency traders. And it's just traders trading back and forth. And you're like, no, it's not. Because 11 times the fucking float traded in 2 minutes. That's impossible. Stop trying to, piss down my back and tell me it's raining. Okay. I know exactly what those are. Those are fucking handoffs. Those are wash selling trades to move a position internally or offshore to hide from regulators and hide from FTDs. And so the pattern has accelerated to the point where it's so obvious. And I could literally give you 85 charts that if I wiped out the name, symbol, and price, you'd be like, that's the same ticker, because the pattern's always the same. So anyway, hi, Susie.
And the pattern that you and I have talked about, the pattern that these small caps and, dancing above and below $1 stocks. So sometimes they're a penny stock, sometimes they're not. But this exact algorithm is what I've been tracking for years in the true penny stocks, like literally triple and quadruple aught, penny stocks and greater. It's the exact same algorithm. The pump, the wash, the retracement of 76% to 87%. And then if it's going to zombie, it retraces back up 76% of the move down and slowly starts to coil. If they didn't accomplish their mission the first wash, then it pulls back and then runs to a new high with another even bigger move. But it's the exact same algorithm. And by the way, this idea that these guys can say that it's natural and authentic, it's totally blown out the window when I handed over the screenshots of this algorithm that literally runs pre-market at 8:01, from starting at 8:01 to 8:01 in 8 seconds. And it's this violent, gnarly algorithm with a broad, 10 to 30% trading range during that 80 seconds. So my approach would be, okay, you guys, if this is authentic high frequency trading and not washing and handoffs, explain to us who's on one side, who's on the other side, and what is it they're trying to do here pre-market, guys, right? So let's go ahead and bring up Susie. Go ahead, and then Did Busy leave? I tried to give a microphone to Busy. I see Ethan down there too. Ethan, you want to grab a microphone? I've offered it multiple times. But go ahead, Susie.
Yeah, good evening, guys. And thank you for following me. A lot of you, I've learned so much, I can't even tell you. But in response to Susan and other people's, question as to what we can do, I've been trying to spread advocacy to, if I said that right, to over on LinkedIn and connect with, different people in my community as well as different people, over there. One person I did connect with who happened to be talking and met Elon and is very big with government advocacy. He's actually the CEO of a nonprofit for this particular cause. And I have actually reached out to one of his colleagues with the MMTLP situation, hoping to hear something back, to see if they would be interested. But this person named, he's a New York Times best-selling author. His name is Peter Schweitzer. And I know a lot of people in the MMTLP community I've shared with this, but this particular gentleman hails from Tallahassee, Florida. And, just those kind of people. He has a YouTube video called The Drill Down. He's fighting for, all kinds of things with government accountability, one being the SEC. And as we all know, so there's just a lot of ways that connect with these people. Get on LinkedIn. I know I sound like a broken record with some of the other people that are over there, but they've actually followed me and they've actually,
You're breaking up, Susie.
Yeah, Susie, we can't hear you.
She might have gotten a phone call.
Possibly.
Uh,
Hey, while we're waiting on Susie to reconnect, AMC, pop up, open your mic again, please, and pop up and tell everyone the easiest and best way to access the series, the documentary series that you created about the fraud in AMC, if you would, buddy. Thanks.
Okay. I hope you can hear me.
Yep, we can hear you.
Okay. The best way, I don't think Twitter has a way where you can project the image onto the TV like you would with, excuse me, like you would with, say, YouTube, where you can just cast it over to the television. But each one of them are available primarily on my profile page, but you just have to click the highlights tab, and all three of them are there. I am working on a fourth one. Hopefully I'll get it done soon. But on my main page, you can also, it also links to the YouTube channel that I have, and you can go through those. I try to make videos every once in a while where I think I'm helping someone or I need to vent on that channel. So sometimes I do come off a little bit upset and antagonistic. That's just, being human. And I do erase those as time goes on because I like to keep those videos at the forefront. So they're all available there. I'm going to try to work on a poster where it shows the order of viewing, like the best way to view each one. The first one that I did was called Heist of the Century, Project Popcorn, an account on historic fraud. That I wish I would have done a little bit better than the ones afterward, but that one excuse me, that one ties into propaganda and the relationship between Edward Bernays, not directly with Adam Aaron, but he is the author and the architect of using propaganda. It was used in World War II, and that's why I kind of make that a connection, a historical connection between propaganda and what happened with AMC. It's all kind of tied in, but it gets more into the meat of Project Popcorn when you get into the One Nation Under Fraud videos, part 1 and part 2.
Yeah, Edward was the originator of the term conspiracy theory, right?
I believe so, yes.
Yeah. Funny how that works. You know, I have some people with their hands up that I've never had speak before in
Yeah,
any of our spaces. You guys do me a favor and DM me, follow me, and I'll follow you, and DM me and tell me what kind of a question you want to ask, because I don't want this thing to go sideways. I
No,
want to
they're
really
clear.
stay on topic.
They're clear, Bam. I know who they are. They're fine.
All right, great.
Yeah.
Go ahead then, guys.
DD, you're up. Let's swing.
Hey, what's up, y'all? All right. So this morning, I had sent this to Pedro, and I put it up in the nest. It is QNRX. I don't remember exactly what time it was. It says 8 hours ago, but I think it was a little bit earlier than that. That stock traded like 18 times the amount of shares. I think by like 9 a.m. this morning that it actually has for the free float and shares outstanding. And if you all feel compelled to help in any way, shape, or form, and you guys look at the free float, shares outstanding, the amount of shares traded, take a screenshot of it, just highlight it, and send it to Pedro, send it to BAM, post it, reply. And both of them, multiple people are actually taking the initiative to calling out Hester Pierce and the SEC and being like, yo, these are wash sales. What the fuck? This is still illegal. Why are we not trying to fix the problem here? It's really that simple.
Can you repeat the ticker, Dee? I missed it.
It's QNRX. And I took
So
a screenshot.
Pedro, I see
Go ahead.
I've already worked on this because there'd be no other reason for this chart to pop up that I just pulled up. Because it's a time slice. It goes back to October. It's October 16th of 2024 and October 18th of 2024. So Pedro, this is one of the tickers you gave me to take a peek at during that period. So it sounds like it just went off again on another new wash.
Yeah, what, QNRX?
You remember this one?
Yeah, I mean, I have to go back. I literally have a list of like, I think it's up to 80 names now. A lot of them are starting to recycle QNRX, and I do appreciate
100%. It wouldn't be sitting here in a little slivered chart in my special space if you didn't give it to me.
I highlighted this one back on December 23rd, and then again on, forget what it was. This one's had a bunch, and it's got the same, it's got the same pattern as it always did. It had a reverse split back in 2023. It's you go look at the history, the chart looks exactly the same. I posted a chart that without a ticker, and just so everyone can look at it, and it's a name that everybody knows. But if you just, without looking at knowing what the ticker is, you guess what, stock that is, and it's the same pattern as all these wash sale events that I highlight. So go through my thread and you'll see the ones that I highlight, and then look at the charts of all these, and you're like, and that's it. The chart that I posted is AMC. It was just a big fucking wash sale event. That was it. The whole roaring kitty thing was just to move a position. That's it. And it was 1.5 billion shares in 3 days, which means at the time, this is after the reverse split. That means, in my opinion, that it's at least 30% of that volume. So you're looking at 450 to 500 million shares that are still short, and they had to move that position, move it over. So, but I do appreciate ping me with any whatever. Just check my thread at 7 a.m. to see if I've put some stuff up already. But ping me with any names that you think or that you see that have a tiny float, that have massive volume. Hit me. I miss a lot of them, but the more we can put up, and look, I mean, you can see me. I just hammer Hester every day. Just, I know she sees them. But what else are you going to do? You got to at least try to highlight this shit and put keywords in like money laundering and illegal and stuff like, which they are. And that's all you can really do at this point. Go ahead, Didi.
Hey, this is really interesting. It'll take me about another 3 minutes here, but I think you just pointed out another one with the exact same pre-market 8-second high frequency trading algo. So great heads up on this ticker. I stopped tracking it. Hey, 100, go ahead and host for me, please, buddy, while I work on some of this stuff.
Yeah, no worries. Steph, what's on your mind, man? You got the mic.
Yeah, hey, sorry, man. I was having a problem just getting off of mute. So I'd love to get people's opinion if they've heard of this, because today I was educated on two different things, and I feel very silly asking this question because it might be old. It's new to me, but maybe it's already well known. But so one thing, somewhat unrelated, when I was trying to get more information, was apparently insurance companies, like for example, car insurance companies, are already factoring in a percentage of liability for the technology side of it. For example, Tesla and their self-driving feature, which comes to my actual question is if you've heard of algorithmic collusion, and if you have, your thoughts on it. Again, it's algorithmic collusion.
Yeah, I'm not sure about the terminology in regards to technology, but I certainly see the collusion inside of the ATS when you're dealing with the broker-dealer operators, which is the algorithms that are trading between themselves. These brokers are trading to their algorithms in their own accounts. So if there's collusion of price discovery, it's through the fractionalization and conditional ordering and matching programming that is inside of every single one of those algorithms, right? So I don't know how else to say it.
I mean, you also, like, as far as collusion, just look at who all owns all the different people doing stock lending, right? They're all part of the Equilend cartel. You know, like, I think that that's like the biggest thing that should be investigated, or one of the biggest things is just Equilend, because JP Morgan, Goldman Sachs, whoever it is, whenever they want to quote unquote borrow a share, they use Equilend. So Equilend knows who all wants to borrow shares and everything. And then on the crypto side, I have to look up what company it was. I can't remember the exact name, but there was the equivalent of Equilend, but on the crypto side. And so I think that, you know, the same players own both, and the algorithms can go through and basically see everyone's inventory, everyone's orders, and then just balance it. And then they just kind of equally pay it out to whoever participated.
Okay, no, I appreciate that. And for context, the reason why I asked is because I'm a curious cat. And so when I hear of certain investigations or cases that have to do with market manipulation, or, you know, crushing businesses, and I always wondered, like, oh, I wonder what the defense is trying to argue their point. And so I read that term, algorithmic collusion. And essentially, this is coming from the NWBO case, where they said, well, you know, we have this algorithm that is a learning algorithm. And I'm paraphrasing. And they referenced a paper that was written from Oxford, and that this algorithm is essentially learning from other algorithms. And so it's not my client's fault, it's the algorithm's fault, and termed it algorithm collusion, or algorithmic collusion. Anyway, I just thought that was fascinating that was their defense. And I'm like, come on.
Yeah, that is.
And if you think about it, it's just them recycling the same old stuff, the same old excuse that Zuckerberg used over at Facebook when they basically disadvantaged the visibility for one political group over another. So that's what's so dangerous about AI, right? If you can blame all these different things on an algorithm and claim that, you know, your developer didn't purposely write the code to make that algorithm do the nefarious stuff it did, if then it becomes a faceless, an algorithm that was created by a faceless entity, i.e., you know, AI, then now you're really, you know, now you have this denied plausible deniability that's, you know, just really opens the door to so much bogus stuff if these guys want to try to do it. But, you know, we'll all be smart enough to know that it's all fake and orchestrated, just like, you know, the AI that served up the images of the founding fathers and that kind of stuff. There is someone behind the scene pulling the levers of, you know, guiding the code along. But yeah, I mean, if you wanted to, like, let's think about in terms of some of these barcode days that everyone sees, and the pinning that occurs around certain strikes on, you know, options expiration Friday and monthlies. You know, if you want someone to go out and enter orders in the options market, that will then create the need to hedge, that then really backs you into price control. If you want to remove yourself a little bit from looking completely bogus, you could have, you know, one person writing one algorithm that accomplishes one part of it, the other accomplishing the other part of it, and it's basically just squeezing price into the barcode, right? Because your algorithm would say, hey, if it moves a penny higher in the range, knock it down, and my algorithm just says, hey, if it moves a penny lower, buy it up. But if you really want to look into that barcoding, go study the time and sales someday and go through and record it and look at the data window. And there's the majority of those trades are being done inside the 1 penny range, which is, you know, completely bogus. They're quadruple aught trades, which is something that's not even supposed to be done unless the stock is sub $1, right? That's the rule. But again, you have this, you know, everything bogus falls under this Madoff exemption, where, you know, you can naked short sell, you can trade quadruple aught increments inside of the penny range if you're a market maker and you claim that you're doing it in good faith and just trying to maintain orderly markets. So, you know, that's like Pedro keeps saying, all these little gifts that were left behind by one of the biggest criminals in the history of the financial markets. You know,
and it has to, you know, you're talking about the time frame, like that's what like the high frequency trading has to abuse. So you have these purposely archaic systems that are literally dealing on the second, and so they have algorithms that have to decide, an order comes in, they see it, and it has less than a second to algorithmically decide whether it wants to route that to itself, whether it can make money routing it to itself or not. And so in that second, you know, I don't know what data it's gathering, whether it's like, okay, well, what percentage of these orders are retail? If so, I can make money on it because I can push the price down. I'm not really sure, but that's just like the whole thing of the high frequency trading is that they like, no human could do it fast enough, but like it's like you could easily make an algo where it's looking at how a dozen, you know, parameters and says, yeah, no, we can make money on this and route it our way, and that's how they make all their money.
Well, it's how it's processed.
People would be stunned.
and hey, by the way, who was it that brought up the ticker QNRX? Is it DD?
Yeah, swing.
Yeah. So I'm looking at this right now, and so this is why it's important to drill down, because as outrageous as the volume levels look on the, you know, daily bar, right at the end of the day, when you drill down, then you really see stuff that can't be explained away. So for instance, pre-market this morning, so this is 5 o'clock my time, so 8 o'clock New York. This stock in a 1 minute bar traded 7,330,907 shares. You drill down further and you find this to like a 25 tick, and you find the chaotic trading, which I'll take a screenshot of this and post it underneath this space. But you see this chaotic trading, and the range is 40.4766 on the upper end of the range, 0.3057 on the lower end of the range. So, you know, again, a wild sweeping range that's above the previous range and below the previous range. And then you get this huge volume. So I'll give you an example of one of the highest 25 tick trading bars. And if you guys aren't familiar with it, 25 tick just means it's a tick is a trade. So up or down or wherever, it's just a trade. So it's not time based, like a 1 minute bar builds out, opens at the beginning of the minute, closes at the end of the minute. As fast as the algorithms can click off, or human beings can click off 25 ticks, it closes that bar out and moves to the next 25 tick bar. So it's really easy to spot interesting high frequency trading patterns when you drill down. So here's a 125 tick bar that did 85,978 shares. Here's another one that did 85,327. Let me see something here. Yeah, and that's the other thing that you'll see, and and Pedro knows more about this than I do, but you'll see they leave behind footprints and fingerprints and blood and hair and all this other physical evidence at the crime scene, because sometimes you'll see these almost perfectly balanced chunks of volume executed in different areas, spread out in time, that are not a coincidence, part of the whole thing. So anyway, this is an interesting ticker, but think about that amount of volume it did during that 1 minute, and it was mostly done during the first 20 seconds, or no, the first.
It's all.
It was the first 5 seconds. It was the first 5 seconds of that 1 minute bar that did the volume I just told you guys about. Okay, yeah. 5 seconds.
Which means mathematically, the only explanation is it's prearranged, and it's imagine like to put it in different terms, like imagine you have an account at E-Trade and an account at Schwab, and you buy it from your E-Trade account and you short it in your Schwab account. That's the handoff. No material change of ownership. Okay, you were short in the E-Trade account, and you have no position in there in your Schwab account, and your E-Trade tells you that you're losing your borrow, you got to cover this, and you go okay, and then you literally buy it from yourself in a different account. That is it. And so the only way that kind of volume can happen is if it's prearranged. It is impossible. Then you look at the float, and it's even more impossible. Like it is mathematically impossible. There is zero probability of that being anything other than a prearranged wash sale, period. There's no other explanation that can possibly be the case. And the fact that the SEC, they have the surveillance equipment. If you have no idea the surveillance shit that they have. They see they're seeing all this. And the fact that they won't halt one of these stocks and go, okay, no, we're going to find out who the fuck did this today. And that's it. All you have to do is one of them. Just one of these stocks. The SEC comes in and fucking halts it for 3 days and say, settle the fucking trades. Who's long, who's short, and JP Morgan, this came through your pipes. Who's trading this? This traded here on this exchange. Who traded that? And get to the bottom of it, and you'd blow the whole thing up. One example, get them one time, figure it out, and say, wait a minute, you just traded 80 million shares today with no beneficial change of ownership. And what's your real position? You're short more, 10 times the float. Okay, we're going to now this goes into receivership. You're done. That's it. All they have to do is one. And the fact that they won't, and some Pollock sitting at his screen can see this shit every day, all day, tells you that they are regulatorily complicit. They are absolutely 100% complicit. And that's why Doug Sifu calls Hester his queen, because she provides the air cover.
A 100, go ahead, buddy, and run the space if you would. I'm trying to finish up this capture of this 7 seconds worth of, 7 million shares in 7 seconds? And then I'm going to post this.
All right, no problem. I got Rocco's got his hand up, and before we continue, there's some smart Pollocks in the world. We're just grace thankful to have one.
Hi, can you hear me?
Yes.
This is Rocco.
What's up, Rocco?
I've been in MMTLP, and that's how I got acquainted to this problem. Never knew about naked shorting. Been in the market 40 years. Never even knew about it. So I bought some DJT because I figured if any stock would, get taken care of, would be by Trump. Trump would make sure they're not going to screw him because he's been screwed so much that he fights back. So I bought some of that, and then I bought, when he won the election in November, I bought the March calls. Trying to think what number I got. The 50s. I bought the March 50s, which are coming up next month, thinking, okay, the shorts have to be thinking he won the election. In January, he gets inaugurated. I better get the hell out. But I'm wrong. They don't even fear him being president. They're just driving the stock down like nothing. Um,
They,
any
I don't think they
comments
can
on that?
stop. They can't stop
Yeah,
what they've started. Like the
yes.
thing is that one, let's say, I don't know, like they're just, I do think they have like maybe one more card up their sleeve that they, because like who are we up against? Well, it's the central banks and it's, the industrial war complex and big pharma, that whole kind of cabal.
Mm-hmm.
And, the thing is that I don't know, no one can, like, the algo is just doing what the algo does, right? Like, I mean, the news can change the price targets, but a lot of these stocks were priced for zero, like GameStop, AMC, DJT, all those were priced for zero. And so the algos just, when that happens, I mean, they get too deep, they can't get out. And so right now, like, let's say that you were working, at wherever, Citadel, whatever. I mean, you're just going to get as much money as you can, selling as many call options. Like, you don't care if you have to ever fulfill them, right? You're going to be looking for your property in somewhere that won't extradite you to the US,
Well,
right?
that's
Yeah.
where I wanted to go with this was, I mean, everyone keeps saying algos, algos, algos. At some point, like Ken Griffin can't go to just leave the country. He's too well known. They'll get him wherever he goes. Somebody has to say change the algos and get out of this. And my second comment
Well,
is they need to
you
do something
you have to understand
like they did with
the
FTX. What's his name? So someone's got to go to jail. When they put one of them guys in jail, like get him, hammer him within 6 months. He's in prison within the
So
6 months, a year. Then you'll start seeing these guys settle. And anybody got a comment on that? And
But they have like bartering chips, right? So like right now, they can't just go and arrest Ken Griffin, right? Because he could tank the whole treasury market. Like he could just screw up the whole global economy. No, but seriously, like he could. And
No,
so
that's the creating the systemic risk. Remember what I said? Become too
exactly.
big to fail. That's what he learned. And you know what? This is funny. Sorry to interrupt, but this is
No, go
funny
for it.
because I happened to see a video interview that he did, and I took a snippet of it somewhere if I could track it down, where he literally said that the thing that he learned from, damn it, I'm trying to remember if it was long-term capital management blow up or the Lehman Brothers AIG blow up. But anyway, what he ended up doing is picking up the phone and calling some of these old timers, try to ask them, hey, what did you learn? What's the most important takeaway? And through their answer to him, that's where you could see the light bulb moment where he decided, hey, the trick is just to simply become too big to fail. I'm telling you, you just hit the nail on the head.
well, at some
Right?
point,
Yeah.
can't.
That is his
Oh,
leverage.
go ahead.
That's his leverage.
So what they have to do at this point, and I don't know exactly what they're going to do. Um, like this might seem like kind of a weird tangent, but just recently, someone was talking about like selling a bunch of coins or whatever. I think it was with some crypto scam stuff or whatever, and they're like, well, selling isn't the only way to get extra liquidity. You can actually wrap those tokens into an NFT and then sell the NFT. So I don't know what they're going to do, but like I think that the reason this has kind of taken so long ever since 2008, which I think they were trying to set this up since 2004 at least, is that they needed to hot swap the whole economy, and I don't know exactly how they're going to do that, but like it's going to be something to do, I don't know, something to do with the sovereign wealth fund, and they're going to have to like maybe make some sort of financial products that wraps all this in there, so that that if say they wrap up all the U.S. Treasuries into something where you'd have to, I don't know, that basically the market makers can't short the Treasuries or whatever, like. They have to like isolate that whole part of the financial system and a lot of the other parts of the financial system as well. I mean, because if the Federal Reserve, right, everyone has these Federal Reserve notes, um, they can just print a whole bunch, right? Let's say that they're actually going to go down, they can just like last minute, they can just print them and spread them all over the world. So how, if they're really trying to get rid of the central banks, which I really think they are, how are they going to prevent them from doing that? And I think it has to do, there's a lot of blockchain elements. There's probably going to be a central treasury, digital currency, and some other things. But yeah, it's a really careful thing. They have to do it all so fast that the swamp can't do anything about it.
Yeah, so I have a theory about this, and I honestly believe that they have to break the chain of custodianship on the obligation side, and also put all of these assets and obligations, meaning US, on a digital ledger technology, and then implant that digital ledger technology and have the same technology that all of the other blockchains have, put it on top of one singular primary digital ledger technology, and then implant that into the sovereign wealth fund, so that when you start the tokenization of assets and its process, you move the asset over into a asset managed fund, and you move the obligations over and force settlement as you move them over in a phased approach. It's the only way to do it, in my opinion. You have to break the chain first, and then put everything on the same digital ledger technology, force instant settlement, protect the asset, and then leverage the asset in the asset fund that you create for it, which is the sovereign wealth fund, rather than have it maintain this financial process of borrowing inside of a debt-based system, i.e. the Federal Reserve. So you got to cut the tie.
Because like you could engulf the entire chain of custodianship into the sovereign wealth fund and the treasury, and then they could all deal with that. And I don't know exactly how it's going to go, but I think that will happen.
Well, the one important thing that I didn't mention that is it's it has to happen is you've got to peg the dollar to an asset reserve or a basket of asset reserves while you're doing that tokenization process, right? You're moving those assets into the sovereign wealth fund, because you're changing a system from debt based to asset based. You got to be able to back the currency at the same time. You can't keep the currency backed by debt or an IOU.
Yeah, so they have to fill the sovereign wealth fund with valuable things, which that's why they have all this gold coming back in. That's why they're going to be doing all the oil stuff. And if they, even just part of it, what they could do is they could take the federal housing public, right? And which that's in conservatorship right now, and then that could be what is our a big chunk of our sovereign wealth fund, because it is a big chunk of our economy, and then our dollars are matched to that, and then all the people in the United States will be incentivized to add value to our country, because that will increase the value of the currency they're holding. So say you're holding a sovereign wealth dollar or a treasury dollar, like it will go up if like the value of the country goes up, which is awesome. That's how it should be.
Right, exactly. So you secure the value of the asset by protecting the currency and doing the same thing. And then also before you even start that process, I mean, obviously you got to cut costs before you make a move. So they're doing that now. And in order to give a little bit of extra cushion to that sovereign wealth fund and moving assets into it, you've got to leverage the trading of the trading agreements between all nations. So that would involve uh, tariffs, and having an equal playing field, opening up the external revenue service, and then having an autonomous payment system that the Treasury is not worried about any type of it being compromised, and then feeding cash flow into that sovereign wealth fund while you're starting the tokenization process of assets in all financial markets. So everything's on the table.
So can that explain this, all the talk about Iceland and then the energy producing portions of Canada that's added into the assets of the sovereign wealth fund?
Yeah,
I mean,
and those
yep.
and those countries, by the way, like, I mean, Canada was doing a lot of the money laundering, like a lot of it. Just TD Bank was doing trillions and trillions of money laundering for the Tren de Aguas, the big Venezuelan, uh, you know, uh, gang. So, like, I mean, they don't even have the money, right? So, like, if they actually pay up for all their crimes that they did, they would be so in debt that them making a deal with us would be the only thing they really could do. And you look at like Venezuela, Citgo, that's one of the biggest oil companies. Well, if they were the ones doing they had the biggest gang. Tren de Aguas was the biggest gang in the world, and so it's like, I don't know. I mean, I think even some of those energy assets in Venezuela, something's going to happen. Those are going to be coming towards the U.S. I mean, Carl Icahn's company is making a bid actually on those assets, and I think that will probably go through. Not financial advice, but anyway, there's a lot of things that are going to come together, and with ties being fixed with Saudi Arabia and them using the dollar, right? I mean, it's possible that if they're going to be using our same currency, well, it'd be, I don't know, there'd have to be some closer relationship as far as their sovereign wealth fund and our sovereign wealth fund. They could like balance each other out and to stabilize the dollar or something like that. There's a lot of amazing things that could happen. And to be honest, I'm like really excited about all of it.
If I could hop in real quick because I gotta go, I'll leave it with this: these fuckers will not go until they're pushed off the landmine. They're standing on a landmine and all this shit, and you have to understand the nature and arrogance and hubris of this of the. You've seen it over the years. Been at it so long. Whether it's Revco, all these guys, whether it's uh, um, any of the big blow-ups, any of the stuff when it all fucking blows up, they're like, oh, we have no idea, They will stay and fight because they can't move. They're literally standing on a landmine. This is as it relates to some of these other stocks, it's a business model across 1,000 stocks. It's actuarial in nature. They've been doing it for 25 years. They can't move because if they try to move and step off the landmine, they get blown up. They have to get pushed off the landmine at some point. But what that does and how it happens, absolutely. Everything needs to go to the trend is towards tokenization, and that's going to happen. But don't expect them to wake up on one day and go, okay, you win, we lose. That's not how these fuckers work. They will literally stay and fight, and they'll move the goalposts, and they'll lie, they'll cheat, they'll hide, they'll do everything. So it can literally go from the darkest to the dawn very quickly if this stuff breaks loose. They will fight to literally the very last moment, and then they'll blow up, and it'll be everyone else's fucking problem. That's how I see it happening. When it does happen, it'll be very disruptive, and they'll cry like, oh, and then you'll hear Kenny G saying, "You lost people, teachers' money, and and the pensioners, and the California," and they'll all blame it on other stuff, and they'll blame it on retail for breaking the system. But anyway, you guys, everybody have a good night. It's time for me to go make a little bit of dinner and head to bed.
Sounds good. Thanks, man.
Thanks, Pedro.
Thanks a lot, Pedro. We appreciate it, buddy.
To add to what you're saying, also these big institutions, I think that they've worked really hard to protect themselves. For example, right before I did the interview with 100, when we went like a deep dive, I was kind of just really looking into specific companies that work within the alternative trading system. And there was like I don't know if it was I think it was in Utah or something. I'm not really sure, but just some like little company that was,
North Capital.
I can't remember if it was that one or not, but I went all into like the employees and see like who is like the compliance person that would be on the hook for making sure, because JP Morgan basically they create this alternative display facility, and so they match up a trade, but they don't actually consummate it. All it would take is for someone else in the alternative trade system to just consummate that trade, just bridge that tiny gap. So they bring it within, a millimeter of itself, of each other. And then someone else has to commit the crime of actually, bridging that gap. Right. And so if they went to crack down on it, JP Morgan would be like, well, I didn't do it. Right. I was just showing them prices. I was displaying prices. That's totally illegal. And so they would, they would like go down, they're like, oh, well, it was this company that did it, right? And then you look at that company, and it's like, well, this person, this blue-haired person that looks totally clueless, they were supposed to check to make sure that we were complying with the regulations, and they didn't. And it's like, and we don't know who the programmer was that actually did it for us. We outsourced that through Fiverr or something. I mean, who knows? Like, and so it's like, that's the problem is like they've, the people who actually know what's going on, like they made sure that they had patsies at every step where they'll be held accountable. And, so it's going to be kind of a mess to like, it's going to be a legal mess as far as there's not going to be precedent how to hold people accountable when they did a good job to make sure that they couldn't be legally held accountable, just because like the crime will be so massive. It has to be like a RICO where they're like, look, it's not any individual thing. It's this pattern of racketeering behavior that you're doing. And that's what we're getting you on. And so we don't care that you had like a gajillion of these patsies. We're still going to arrest your butt.
Yeah, and to your point, inside of those ATSs, they also have their own individual confidentiality agreements. So you can't see, who's really controlling what when the trade is actually executed on whatever venue they choose. So,
and we read that actually,
yeah,
on the stream that we did, and in their that one company I was talking about, they're like, all we are doing is consummating trades. We have we take no responsibility for the trades that are consummated. It's like, oh
yeah.
gosh.
Yeah, it's a joke. It's a joke. It's a terrible joke, but it's a joke. So, I don't know. I think we're gonna move the conversation to any other topics that individuals on the call want to bring up. So if you have any questions, please feel free to request a mic. But BAM, I think we've covered a lot of bases the last 2 hours, or 3 hours, I should say. So I don't know. What do you want to do? Oh, Ethan,
I've got
you want to say anything, Ethan? I'm sorry, BAM.
Yeah, that's what I was going to say. I'd love to have Ethan chime in since he's got a mic. Ethan, man, did you just you creeping, or you out to dinner and pretending like you're listening to us? Unmute your mic, man. Lower left.
Can you hear us,
Ethan?
Ethan? He might not be hearing us, or he might be on a call.
He's a poser. But we'll always love him for the rest of time and eternity because of the video he captured with Gasparino at the playground. Oh, that was a thing of beauty. Oh my, with the tape measure, no less. Oh man, I almost felt sorry for Gasbag. Almost. Almost. Ethan, man, can you hear us? Unmute your mic, buddy.
Hey guys, sorry it lagged a bit. I caught the second half of everything and just really intriguing stuff. FTX is always something I'm interested in. I think these guys on our side, probably at GameStop, Loopring, and other places are also like battling some of that, maybe with NFTs and other things, which are picking up. But either way, bullish on the stock and appreciate you guys. Really interested to hear more next time y'all are discussing.
Thank you. So Bam, I don't think Ethan can hear us.
Yeah, he can't hear us. I'm about to post. Unfortunately, I don't really know how to post to the bubble, and I'm working on two different things. They have the call on the cell, and I'm working the charts off the desktop. So I'm about to. If you look under the original post of this space that I did, not the follow up, repost of the space, you'll see a couple charts of QNRX. And so what it turns out is I don't remember what DD said as far as the total, the real float in this stock. But it turns out when I drilled down into that 1 minute bar that traded 7,330,907 shares before the market opened, obviously, normally a pretty quiet period. Within that, I told you guys, I think 7 seconds, it actually was 5 seconds. And of the 7,330,000 shares, the majority traded in that 5 second high frequency trading algo blast. So basically over 1 million shares per second, no matter how you want to slice it. So I'm going to post these two charts. The one is the 1 minute bar activity with the volume underneath it. You'll see the huge tall spike. And then you'll see the chaotic looking volume bars and the chaotic looking trading range in the stock on the 25 tick chart that I post, which shows a gold box with 5 seconds of information. So I just posted that on my X account if you guys want to check that out. Is there anybody else that wants to ask any questions? Anybody have any questions about the whistleblower report I submitted in October 23? Or the videos I've handed off to some of the other different groups working on this stuff, or FTX and my theories behind what happened to the tokenized stock debacle, where that disappeared to, how they buried those skeletons. It's pretty similar to the warehouse that burned down in Chicago, but different. The same, but different. Okay, looks like we're done then, you guys. Thanks a lot for joining us. Thank you very much, 100 for.
You're welcome. Just one more thing. I just want to remind everybody on the call, we're in a time where we make a difference, and I'm going to remind everyone that the Doge SEC handle is very important for you to use and express your opportunity to help make a difference in your own life situation, but more importantly, our country. So utilize that opportunity. You've got a tool. Do something. Act. Be an activist. Even if it's sending one message, you never know. It may lead to something that can make a profound impact. So thank you.
And remember, thanks for adding that, 100. And remember, you guys, even if people behind the scenes, regulatory agencies or whatever level of our government want to try to ignore this, as they have for so many years, this has become such a hot potato topic because of a lot of the people in this space right now and a bunch of other people that aren't here right now, that the goal here should be to place that hot potato directly in the laps of as many people as possible, so that they have to try to figure out a way to claim that if they want to ignore it, they have to be able to figure out a way to claim that, they saw it, but they just didn't fully understand it. And that's the reason they did nothing. Dumb it down, make it so simple that they can understand it. and then make sure that you, like I say, hand that hot potato to as many people as possible. And pretty soon someone's going to throw someone else under the bus, because they're not all going to go down with a sinking ship. You know, there's a bunch of backstabbers in that area of our country. So thanks again for joining us, everybody. Appreciate it. The call was recorded from beginning to end, and so you can use portions of it, snips of it. And if there's anything in there that you think's interesting or that you'd like to pass along, do it. I'd encourage you to take a look at underneath my, like I said, underneath my original post announcing this space. Look at those two charts that I just posted of this ticker QNRX that just happened today. And it's a beautiful example of an unrealistically high amount of volume that's traded in a single session. And then you drill down an unbelievable amount in a single minute. And then you drill down in this even more unbelievable amount in a 5-second flurry. And it's pre-market to boot. So this is something that people be interested in looking at. Thanks again, everybody, and have a good night.
Take care. God bless.
God bless.